All right. Hello, everybody. Welcome back to another episode of the Market Close. We are live. We've got a bunch of earnings coming up after the bell. Rocketlab and Asts are the two biggest ones that I know a lot of people here are excited for. The space companies have not had all of their earnings yet. We had Redwire last week, but Rocketlab and ASTS and SpaceX, obviously, Rocketlab and ASTS are the next two big ones that we will talk about. We've also had a bunch of different headlines since the market open that I think will be relatively interesting to discuss in regards to different market action that's happening. We got an update from Trump on Iran as well. Unfortunately, oil has not really budged. It's actually gone higher. It's now at $82. Trump didn't say stuff that necessarily got the market to be excited, but nonetheless, you're not seeing that much pain in the equity markets. S&P 500 right there is flat on the day. Another flat day as we consolidate here around all-time highs. You've got Rocketlab that did make a run almost to $90. Now it's at 79. I actually like the price action going into the print. It's always tough when stocks are at all-time highs, rallying the day of earnings. The fact that it's actually, red going into earnings, I think is actually nice if they have some really good results. Microsoft back above 500 pounds. Great day. Almost got to 180, was 40 cents away, 175.30 right there, still up about 2%. HIMS, we got earnings today. ASTS, that's down 5%. Same thing with Rocketlab. Google, that is up in the day. Archer, which announced a bunch of acquisitions this morning. It was up 20%. Now it's up 11, got all the way down to 590. So these earnings are going to be important to make sure that momentum continues to stick. I think the real theme of the day, before we get into some of the headlines, is software having a moment. Rubrik up a nice 10% on the day. The stock was down 50% in April. Zeta also was down 35%. The stock is up 4% on the day, continuing its momentum after earnings. Has not looked below 25 since we got those earnings. SpaceX getting a nice little move right here, right at the close. This kind of just happened as I went live, 138. I don't see any headline for SpaceX other than the stuff we talked about this morning with Elon. But SpaceX rallying maybe is a signal that Rocket Lab's going to crush earnings, and the market's kind of just using SpaceX as the proxy right there, but we're going to see when we get those results. SanDisk, that's up about 3%. SMCI, that's up about 2%. It was up 5%. Cloudflare, even after a $2 billion offering, up 3.5% of the day. ServiceNow, that's up 1.76%. I mean, your SaaS names are loving it today. So are your hyperscalers. Max 7, Google's up, Amazon's up, Meta's up, Microsoft's up. NVIDIA's kind of down, and we'll talk about one of the reasons why NVIDIA's down. NVIDIA's headline actually took down a lot of the semis with it. The Photonics names, unfortunately, got rugged here. AOI down about 2%. It was down a bit more. Lumentum. By the way, does Lumentum have earnings today? I couldn't confirm. Lumentum down 8% right there. I think they have earnings, so that'll be one to look at. And then the memory names have been relatively flat. Nothing came out of Micron's investor conference this morning that was substantial. I mean, there's a couple quotes we'll go through, but pretty much all of it is the same stuff they've been telling us. They did not raise their quarterly guidance, and I think that's why the stock is relatively flat. But the NVIDIA news might be more of a reason for why that's happening. Micron right there at 875, that is down about 0.28%. All right, so let's get into kind of the bigger headlines that we had to start off the day. We have Rocketlab, ASTS, HIMS, Archer, Copen, Riot, Rumble, QUBT, a bunch of different earnings after the bell, GoPro, Plug, so we'll talk about all those earnings. But we got about 10 minutes until we get into them. Okay, so couple of things we got since the market open. Your boy Burry is back at it. Last week, it was Nebius. This week, he buys more puts on Palantir. March 2027, $100 strikes. He wrote, quote, "I think the company shares are worth under $1 in the long run." I disagree with that analysis. And I understand the Q2 earnings were so good that Burry probably couldn't sleep for a couple days looking at those numbers and realizing how much his puts are already underwater. But I don't know if doubling down and putting out these hyperbolic statements, which honestly, I think he's just trying to sell Substack subscriptions at this point. Like, I mean, Palantir at $1 would put the market cap at $2.5 billion. They're doing $8.5 billion of revenue this year. Like, it is so absurd that it's actually embarrassing. Like, it's one of those things where it's like, it looks so bad for someone who's supposed to be seen as such a sophisticated investor that putting out that statement is obviously a hyperbolic plea to get people to believe that the company is effectively worthless, which, you know, you can say you don't agree with the valuation. To say it's worth zero doesn't make a lot of sense to me. So you got Burry shorting Palantir, and we're going to see how that ends up playing out over the long term. 175 right there on Palantir. But again, Palantir had a great day, giving some of it back towards the end of the day. It is what it is. Obviously, the market cap has continued to move pretty aggressively in the past week, up 40%, 175 right there. but a close above 170, I think, is still healthy at the end of the day. Accelera, great day. This thing touched $10 for a second, 35%, massive volume today on that one as their phase 2 results came out to be pretty effective. Now, this is the kind of give and take you get with the biotechs. Accelera up 40% on the day because their trials went well. 10x Therapeutics down 81% on the day. Sorry, 88.1% on the day because their trials did not go well. So it's one of those things where you just got to really believe in the name that you're in when it comes to the biotech space. Otherwise, those candles can go against you pretty badly as well. All right, NVIDIA. So why is NVIDIA down? Why is NVIDIA down? Honestly, NVIDIA was hitting almost 225 until this news came out. And then, you know, the entire market got pretty mad about the semis, which I don't know why they're mad about it. But, you know, there's a bull in the bear case here. NVIDIA is partnering supposedly with Apollo, Blackstone, and Goldman Sachs on a massive $500 billion AI financing deal. It's not officially announced by NVIDIA, but the Financial Times is reporting that it probably will be announced later today, if not this week. The capital would support chips, power generation, data centers, with a deal potentially announced as soon as today. So why did the semis tank when that came out, and why did NVIDIA tank? Honestly, you know, one could say from a bull perspective, they shouldn't have tanked because that's just a lot of money going into the semiconductor ecosystem. 500 billion of that being financed, that's a good thing. More chips, more compute, more memory, more data centers, all that stuff that helps, you know, the entire semiconductor index. The problem here is that Apollo, KKR, Blackstone, you're not just talking about small private equity or private credit firms. You're talking about people's pension funds. You're talking about retirements. I mean, these are the companies that are custodians of those types of assets. And so if they're going to essentially get those assets in the context, or they're going to take those assets and put them in the context of financing the AI revolution, I think at least for today, the market's like, wow, we don't know how to digest this. 500 billion is a big number. It's $500 billion. Bullish for semiconductors, but this has really got to work. The market already had to digest the 250 billion backstop that NVIDIA gave to OpenAI 2 weeks ago, and NVIDIA tanked on that news because, again, the market thought it was circular financing. NVIDIA right there below 218. This is not necessarily circular financing, but it's definitely a bit more riskier financing. Again, we don't have all the details, but I think that's why, you know, as soon as that news came out, you just had a candle take NVIDIA down $3, and it took down all the semis with that as well, unfortunately. So yeah, I think there needs to be a lot more of an understanding of what's happening with NVIDIA, what's happening with this financing, but as of now, that's, I guess, part of the reason why this stock took a hit. Trump, this is what he said about the Strait of Hormuz. About 15 minutes ago, he was live signing some executive orders. Here's what he had to say.
You give us an estimate of when you think the Strait of Hormuz will be part
of it's open now. We're taking a lot of shit. It's open now. Look, the only one that has control of the Strait of Hormuz right now is the United States Navy. We have a blockade that's been infallible. It's a steel. It's the United States Navy. We have a blockade that's been infallible. It's a steel wall. And we let people in that we want to let in, and those people come in, and they've been coming in and they're going out. So it's actually open now.
Okay, so he's saying it's open now, but the Iranians said it's not open. By the way, Robinhood getting a massive spike right here into the close. So you got the Iranians saying it's not open. You got Trump saying it's open. Also, the Iranians earlier today said that there's going to be, they're not going to open the Strait of Hormuz until 2029, until Trump's out of office. That was one of the headlines that came out of the Tansim news agency. I don't know if that's the case, but the fact that they actually said we don't want to open it for the next 3 years is, you know, something the street doesn't love. Okay, getting some red candles right into the close. NVIDIA just got a big red candle. So did AAOI. So did Micron right there. I wonder if that's news specific. SpaceX just keeps running. That's not getting the candle. Robinhood just spiked up almost to 95, then took a candle down. Definitely some volatile price action going right into the print. Rubrik right there, also taking a red candle. S&P taking a red candle. Rocketlab taking that below 80. Archer still up 12. A lot of these names defending some of the momentum they've had throughout the day. But as we get into the close, you're seeing some of these names get hit. Nebius right there down at 185. Nebius tried today, got up to 195. Again, I think it's trading with Micron, the Neo Clouds, and the memory names. They're going to have earnings in a couple of days, so we're going to see what those earnings look like. CoreWeave as well got up to 93, now back down to 88.17. down about 2.7% as well. We will have Technical Tuesday tomorrow. I talked to Jason today. He confirmed it. We'll be good. So we will not be listening to CoreWeave's call. I'm sure someone will be streaming it for those that want it. But obviously, we'll go through the results with CoreWeave and take a look at those. And this is what Trump had to say as well about all the reports that he's been talking to Kevin Warsh.
Thank you, guys. You've been calling Chairman Warsh occasionally? What are you talking about?
No, actually, the Wall Street Journal had a wrong story. He said I spoke to him. No, I have tremendous respect for Kevin Warsh. I've only spoken to him one time briefly a few days ago, just a conversation. Look, he's going to do it. He's going to run it. I know what he'd like to do, but he has to run it. He's got a board. It's not only him. If it was up to him, it would be different. But he's got a board. But I've only, they said I speak to him all the time. I've spoken to him one time since his assumption, since he took over. And great conversation, but he's a great guy. He's my pick. And I'm going with him 100%. But they made it sound like I live and breathe. I speak to Kevin all the time, every time. I spoke to him one time. Okay,
so that's what Trump had to say about Warsh. Again, Fed rate cut probabilities continue to be low, but the rate hike probabilities have also gone down, which is at least a good thing, and it's helped stocks to an extent. NVIDIA, really, market's not liking that financing news. They're just not liking that financing news. Let me do the poll right there in the chat. Which one outperforms? We got Rocketlab, ASTS, HIMS, and we'll do Archer. And we'll see what people think. Some of those having a good day, a couple of those having a bad day, and maybe the earnings changed the ground. Okay, does Lumentum have earnings today? For some reason, I heard they had earnings, but I feel like I would know. Earnings August 11th. That's tomorrow is the call. No, August 11th. Okay, tomorrow. All right, so tomorrow we'll get those earnings, and we're going to see what happens. Put in the chat which one you think outperforms. Rocketlab, ASTS, HIMS, Archer, those are the main ones. Again, the big headline today is NVIDIA getting ready to get into a $500 billion financing deal for AI. AMD right there, down 3% on the day as well, with a lot of these private equity firms. The other thing is, where is this money going? Is it going to chips? Is it going to new data centers? Is NVIDIA backstopping it? We have no details about it. And I think the market, as a result of that, just got a little scared and didn't really know how to necessarily interpret it, which is kind of what took all the semis down after taking NVIDIA down as well. By the way, Schwab's trading activity in July was massive. Clients were net buyers by 2-1 in ETFs and equities. The top 5 stocks that they bought in July on Schwab: SpaceX, Micron, Intel, Oracle, Tesla. SpaceX, Micron, Intel, Oracle, Tesla. Top 5 stocks bought for Schwab clients in July. Top 5 stocks that were sold: Apple, AMD, Broadcom, PayPal, Adobe. Apple, AMD, Broadcom, Adobe, and PayPal were the top 5 stocks that were sold for Schwab clients in the month of July. All right, here we go. We got a lot of earnings. Monday, August 10th. Thank you, everybody, for being here. The stock market is now closed. All right, here we go. USAR. That's another one we'll be taking a look at in the rare earth trade. So we've got USAR, we got Rocketlab, we have ASTS, we have Archer, we have HIMS, we have Plug Power, we have GoPro, Kopin, a bunch of these smaller names reporting today. And so we are going to take a look at all of them. Obviously, the big 4, Archer, HIMS, ASTS, and Rocketlab, are the ones that we're looking for. Fastly had a great day. Dude, a lot of these software names, look at that. Fastly, 20%. Massive day. Akamai was up 6%. You had Rubrik with a nice 10% day. I mean, honestly, once again, it's the yin and yang of the market, right? We had the semis dominate for the first 7 months, and now you're seeing the software names and hyperscalers and financials and healthcare get a little bit of love. The defense names, Ondas, Red Cat, Kratos, Aero Environment, your defense names got some love today as well. So a lot of the names that were just beat up over the past couple of weeks, past couple of months, they're coming back a little bit. And that's how it should be if those companies are executing at a very high level. Zeta closed the day up about 3.3%. Palantir, I think we got the 175 close, 175.23 on Mr. Palantir, as that was up about 2% on the day. Nebius ended down 2%. Oscar ended down 0.5%. Google was up about 1%. Amazon, I think, was also up on the day, up about 1.32%. Hoodie, which was kind of stuck for the majority of the day, ended up 3.2%, 94.50. Celsius was down 2. Oklo was down 8. Palo Alto and CrowdStrike, your cybersecurity names, went crazy again, both hitting all-time highs, as that was up 5 as well. All right, Riot, we got the first earnings. Riot is up 3%. Revenue 172 versus 151. That is a beat. They lost $237 million in revenue, which I don't think was necessarily expected, but they did beat, or sorry, on an EPS, they lost, so $237 million net loss in general. Revenue was a beat by $20 million. Plug, they missed EPS by 75%. Plug's up 5% after hours, negative 14 cents versus negative 8 cents expected. Revenue 178 versus 169. They beat on revenue. So you got a beat on revenue for Plug, a miss on EPS. Revenue is up 2% year over year. EPS is up 30% year over year. And then Riot lost money, $237 million, but the revenue beat by about $20 million. ASTS, are we green? It's up about $1. Still waiting for that one. Riot made $23 million in data center revenue, $113 million in Bitcoin revenue. Wow. So Riot's revenue is still coming more from Bitcoin than the data center stuff, even though they did sign a 20-year lease for 191 megawatts of capacity, which would be about $9.1 billion of contracted revenue. I do not know if Matt is streaming the Rocketlab earnings. I think he is. And if that's the case, maybe we'll listen to something else. We'll figure it out. But if he's not streaming, I'll listen to it. If he is, then we'll listen to something else. Rocketlab, all right, got a little candle after hours. Same thing with ASTS. HIMS, we don't have the numbers. It's flat after hours. But in the chat, if you're in HIMS as well, I know this was a big name last year. Obviously, this year has not been the best, but it's also been beat up for the past few quarters. So any piece of good news, maybe some resolutions to the lawsuits or things of that nature, can get the street to be a bit more excited. Okay, still waiting for those numbers. Again, we talked about that NVIDIA $500 billion third-party capital move. Goldman Sachs, KKR, BlackRock, Blackstone, Apollo, Brookfield. Oh, did NVIDIA officially announce it? I think NVIDIA officially announced it. Let me go to the website. This might be the official announcement here. If that's the case, then the market will have a better way to interpret what they think of that. Again, it's not bearish to have that much money there. It's just, I think the market needs to digest, like, all right, $500 billion being financed through a lot of these companies that, quite frankly, their stocks were down 40% in the first half of the year. I mean, many of these private equity names, private credit names were like no-touch names, given all the software they were holding that got marked down pretty badly. So I think that's also kind of scaring the street to an extent. Rocketlab up 1%. Do not have the numbers yet. I think those numbers might come out in 1 minute. It looks like this is officially from NVIDIA. I don't see it on their website, but based on the details, $500 billion with 6 finance firms. NVIDIA and its partners will create dedicated capital pools for AI infrastructure customers. It looks like this is official. KKR, Goldman, Brookfield, Blackstone, Apollo, and BlackRock. Okay, Rocketlab goes down in the initial reaction, down 5. HIMS up 6. All right, so HIMS goes the opposite. HIMS is up 6, Rocketlab down 3. The initial reaction isn't the most important. Got to give it a couple minutes. Usually 3 to 4% moves can easily get reversed, especially last week. We saw like 10 to 15% moves get reversed. But what is the data that'll help us understand it? HIMS, wow, they missed on EPS by 640%. 37 cents negative versus negative 5 cents expected. Revenue, they beat by 3%, $753 million versus $730. It's a pretty big miss on EPS, down 318% year over year. That might be due to taxes or something else. Revenue is up 38% year over year. Rocketlab, they came in line with EPS. The street wanted them to lose 8 cents. They lost 8 cents. So no beat on EPS, no gap profitability. EPS is up 40% year over year. Revenue, it's a very small beat, 234 versus 230. 234 versus 230. It is a beat by about 4 million. It is up 62% year over year, but it's not a massive blowout. And maybe that's why that initial reaction was red. It would not surprise me if it recovers. I mean, it's not a bad print. It's not a miss. It's just not a massively epic print. Hims got the 7% rally. Now it's at 3%. Archer came in line on EPS, 34 cents negative versus 34 cents negative expected. Revenue, Archer's basically flat. They beat by 155%, 5 million versus 2 million expected. Revenue was 0 last year. This year it's 5 million. Obviously, that's a big increase. And then EPS is up 6% year over year. Rocketlab, yeah, dude, down 2%, down 1.5%. That's not even a real reaction, to be honest. I mean, Rocketlab goes up and down that much every other hour. So until we get like 5-7% up or down, this is basically flat. You're not seeing a massive reaction here. In terms of him, so a couple updates. Subscribers, Street wanted 2.74 million. They came in at 2.9 million. Operating expense, Street thought it would be 490. They came in at 578. Adjusted EBITDA for the full year, the Street wanted 350. They're coming in at 325. So they did miss on adjusted EBITDA for the fiscal year. For third quarter adjusted EBITDA, the Street wanted 93 million. They came in at 95 on the guide. So they beat on Q3. They're probably sandbagging for the fiscal year. The revenue, they beat substantially for 2Q, 753 versus 600 expected. And then subscribers, they also beat. So you do have some beats, some misses as well. Stock's now flipping red, down 3%. We'll dive deeper into the numbers. Rocketlab down 3. ASTS, I still don't have that yet. I think that might be at 420, so we might have to wait for that. Riot's up 3. NVIDIA up a little after hours. Hims now down 5. Rocketlab now down 3. So they're all starting to take a little bit more of a hit. Oil also is up on the day, 5%, so that's not good for any of the high beta momentum. Quantum computing, QUBT, that stock is down 5%. They missed by 25% on EPS, negative 5 cents versus negative 4 cents expected. Revenue 5.5 versus 5.15. They beat by 8%. EPS is up 81% year over year. Revenue is up 9,000% year over year. This stock, $2 billion company in the quantum space. Obviously, all the quantum stocks have had some problems, but that stock is down 4.6%. I don't have USAR yet. It's flat. Don't have their numbers. Should be getting those soon. Surf Air Mobility. This stock is a penny stock, less than $100 million market cap, basically flat after hours, but they lost 28 million. Revenue, they beat by 5%, 29 versus 28. EPS, negative 29 cents versus negative 17 cents. So they missed EPS by 70%. And that's why that stock's down. The reason Netflix is up today is because there was a headline that their ad inventory for like 2027 is already sold out. And it's like way above the demand they priced it at. So there's lots of demand for Netflix advertising, which is, I think, part of the reason the Street gave it some love today. Rocketlab, trying to get deeper into some of these numbers, down 3. Let's see if we can get something stronger on the number side. Let me see if their website's updated, but you don't have a miss on any of the stuff that matters. Okay, Rocketlab also signed a Neutron launch deal with Kepler Communications that just came out. We might see a bunch more announcements as Rocketlab tends to do that after hours on earnings. Rocketlab, a global leader in launch services and space systems, today announced it has been selected to launch a dedicated Neutron mission for space infrastructure company Kepler Communications. While Kepler has previously relied on Ryder capacity to deploy its first 33 satellites, this Neutron launch contract is the first they've booked a dedicated mission on a commercial launch vehicle, providing Kepler with much greater control on the launch schedule and orbital parameters to meet their constellation requirements. I imagine Peter Beck will talk about that on the call, as Neutron is kind of turned into, the massive bull case for Rocketlab. And it's what people point to make sense of the valuation. Like, Neutron really is what the Street is not thinking about. All right, we got another announcement. Dude, I love Rocketlab. On the earnings days, they just drop the PRs every 5 minutes. Okay, new one just came out. Rocketlab today unveiled Ghost, a newly global deployable containerized launch system, suborbital and orbital launches from anywhere in the world. It's called Global Hypersonic and Orbital Spaceport Technology. It transforms Rocketlab's Electron and HASTE rockets into a launch anywhere, launch anytime capability for multi-launch flight campaigns and critical national security missions, packaged entirely within standard shipping containers. Ghost deploys complete rockets, launch infrastructure, ground support, and range control systems anywhere in the world. Peter Beck, we've been leading the field in the small launch for missile defense and national security for years. Our reliability, repeatability, and affordability sets us apart from everybody else. And creating Ghost is about packaging that up into a deployable system that can serve the world's most important programs from wherever their missions are needed. Okay. Getting a bunch of different updates right here from Rocketlab. Here are the actual numbers. So we already looked at it. Revenue is up $234 million. That's up 62% year over year as that continues to grow. Backlog of $2.36 billion. That's up 137% year over year. They acquired Iridium in the quarter. More explaining deeply what Ghost is going to do for them. $397 million contract we saw last week, awarded $160 million across 2 contracts to do 3 geostationary satellites. They are guiding for $265 million. GAAP gross margins of 31%. No, they're not guiding for profitability. Not yet. Operating expenses of $149 million. About 641 million shares outstanding after the $3 billion dilution. They're guiding for an EBITDA loss of about 23 million. So nothing that the street's going to be happy about in terms of profitability. It might take Rocketlab a few more quarters to get that profitability. It's not there yet, but I mean, the stock reaction is relatively basic. Down 2% is just not that volatile for Rocketlab. HIMS, on the other hand, is actually going down 6% as that's taking a hit. Rocketlab down 2%. CoreWeave just secured a delayed draw term loan facility with approximately 5-year maturity to fund high performance computing infrastructure. It's around 5.5%. Company has raised more than $30 billion in debt and capital this year. CoreWeave flat after hours, but essentially getting another contract to support financing for another 3 years. As HIMS continues to go down, let's get deeper into HIMS numbers. Rocketlab numbers look fine. It's just nothing like that would blow you away. But it's also not something that would, last time people forget, part of the reason the stock went up last time is because they announced an Anduril partnership. The Anduril thing is like, Anduril's an amazing company and a very big name in defense. So you put Golden Dome with defense, Anduril, all that stuff together. Street got excited about it last time. This time, they haven't really announced anything that crazy. The Neutron thing was good, but the stock has rallied a bit over the past couple of weeks. Rocketlab right there down about 1.5%. Okay, HIMS going deeper into their numbers, down 5%. Revenue is up 40% year over year. Subscribers are up 20% year over year. They raised their full year guide to $3.3 billion. Which is up from what it was last time. Gross margins were 64%. They still lost $86 million, which actually is, are these legal costs? Because they made $40 million in 2Q 2025. Now they're losing $80 million. That's got to be legal costs that's causing it. I would imagine. Archer numbers already came out. $5 million of revenue. EPS came in line with expectations. And so Archer, 2% after hours, but the big announcement was early in the morning when they acquired the 3 companies that they announced earlier today. Andrew Dudham, HIMS is delivering a world-class health experience to a global scale and a reasonable price for the nearly 3 million people who rely on us for access to care. We're proving quarter after quarter that helping people feel great and delivering strong results aren't mutually exclusive. We have never been better positioned to move faster or further than we are today as we rebuild the consumer health experience from the ground up with a doctor-led AI clinical engine. The depth and breadth of relationships with customers worldwide has never been greater. Every quarter, we raise the standard for what care should look like everywhere. High quality, personal, and accessible. Stock still down 6%. Where is ASTS numbers? We got to wait till 4:30 for that, or 4:20. Maybe it's 4:20. I think last time it was 4:20. Jensen's live. Oh boy. All right, Jensen. There you go.
Founder and CEO. David Solomon is the CEO of Goldman Sachs. Larry Fink is BlackRock's CEO. John Gray is Blackstone's president. Vladimir Zlezak is global head of digital infrastructure at KKR. Jim Zelter is Apollo's president, and Bruce Flatt is Brookfield's CEO. And gentlemen, welcome to all of you today. It's kind of amazing to get this group around the table, and Larry, to have you joining us remotely too. But we have to start with this news. Jensen, this is a big deal, and it's a big number. $500 billion, more than that in terms of financing. We know this is an expensive build, but tell us a little bit about how this came together and what exactly it is.
Well, first of all, I want to thank all of my partners for joining me here today. I think this is the first time this has ever happened before, and I can't imagine a more important time to do it. We're announcing 6 partnerships today. These partnerships are going to pull together independent long-term capital to fund and support AI infrastructure build-out. This is an extraordinary time, as you know, because this is the first time in some 60 years that the computing industry is going through a fundamental platform shift from the way that software was done before to the way that it's going to be done in the future, called artificial intelligence. Fundamentally, what's different about this industry and this way of doing computing is that the computer is now part of the infrastructure, like electricity, like the internet. And so you have to think about it like it's infrastructure and build it out accordingly. Every company will be powered by it. Every country will build it. And so we're talking about an extraordinarily significant infrastructure build. This is
with a very hefty price tag, too.
It's a hefty price tag. Each gigawatt is something like $50–60 billion. And so there's energy involved, there's land, power, and shell involved, and of course there's the computing part of it. This is, of course, also a milestone for our company. We used to build chips that we sell, and these are technology components that people buy and use. But now, NVIDIA's AI factory platform is really an investable asset, an infrastructure asset. And the reason for that is because it's productive, it's revenue generating, it is fungible, it's used by just about every cloud service provider, it runs every AI model, it runs algorithms of all different types. And so it has really broad, deep reach and off-takers. This is a really great opportunity for us to build out the infrastructure, take advantage of an asset that is investable, long life, and productive. And with the partnerships that we have here, we can support a really broad ecosystem build out.
Gentlemen, I'll say it's very unusual to have all of you in one place. Most of you compete on one level or another. A lot of times you work together on things too. But how did this come together? How did they all come to you? And David, I'll start with you on that.
Well, I mean, Jensen approached us, and we've got a deep belief, a lot of confidence in NVIDIA and what they're doing. We have a deep belief in the opportunity set that's ahead. We, like all the partners at the table, have been spending a lot of time raising capital and thinking about the capital that's necessary and how we create the best access to that capital for people that need it to move things forward. I think one of the things Goldman Sachs brings to the table is we have an extraordinary distribution network. So we bring capital, but we also bring a very, very unique distribution network. But Jensen approached us with the idea, and we said, we'd love to talk to you about it. We have a deep belief in the direction of travel and the opportunity set over the course of the next 3, 5, 7, 10 years. As Jensen highlighted, it's a big infrastructure build, and the capital markets are signaling that there's lots of capital available to support it. And we're trying to find all the different ways that we as an organization, in partnership with other great firms that are doing similar things, can participate in getting the capital to the right places to extend this or accelerate this infrastructure build.
I described it before as if I buy a GM car, I might get financing from GM. This is you kind of bringing other people from the outside to say these will be the partners that do this financing.
This really
it's not, and by the way, it's not NVIDIA's money that's coming up on this.
That's right. This is all third-party, independent, long-term capital that all of my partners are going to go help us pull together. This is really quite extraordinary. This is a phase shift in the way that people think about computing. It used to be, technology. Now it's infrastructure.
And I would just add, this is really what David just explained. This is calling all precincts.
Yeah.
This is American exceptionalism and what NVIDIA has created over the last 33 years coming together right now. But this is calling all precincts because really now compute is an asset class. And when we think about the last 100 years, the last century of water and power and utilities, in 2026 and beyond, the next decade, the U.S. will lead this. It's a global imperative, but it's a U.S. imperative. And as I said before, this is really all precincts coming together, not just one market of equity or debt or banks, but it's all. It needs any and all.
American exceptionalism, meaning that you are going to be building with an American company, NVIDIA and others, but this is financing that could go around the globe.
No doubt. But the depth and breadth of the U.S. global markets in aggregate is the envy of the world. NVIDIA is one of the envies of the world, what they've created. And what you're seeing here, this consortium of partners, and yes, we do compete, but we finance a tremendous amount together as well. And in the end of the day, this will benefit the U.S. economy as a competitive tool for the advancement for the next decade.
Larry, let me get you in because you're not here around the table today, but I'd like to get your perspective on this. Is this new money that's going to be spent? Have you already raised this money? Is this money that you were going to be deploying into AI anyway, and it's just kind of funneling it towards certain partners?
Well, first of all, hi, everyone. Jensen, thank you. Thank you for the trust that you've given BlackRock. We have some capital now, but we're going to be raising quite a bit more capital. As Jensen said, each gigawatt costs $50 to $60 billion.
Guys, either this shit is going to go totally wrong or compute is completely undervalued and there's a lot more money coming into the system. I mean, my basic read off it is either this is a $500 billion gamble, which would turn into a multi-trillion-dollar gamble on compute. But if all these guys are saying compute is an asset class and they are getting ready to raise what seems like hundreds of billions, eventually trillions for compute, I mean, it's going to benefit the entire semi-stack if it plays out. And as long as AI is delivering the ROI, I think it does play out, but there's a lot of questions behind how this is actually going to take place.
Build out. And we're talking about, in the United States alone, we're going to need over 70 gigawatts of power to fuel this. And then you add up everything else around the world, it's going to be an enormous financial opportunity. As Jim was talking about American exceptionalism, it has to flow through the American capital markets because this is the biggest source of capital. But the other angle that I think this is so important that we must also understand, there is quite a bit of negativity around AI and data centers right now. But let's be clear, this is going to be creating a huge amount of jobs. You think about it, even 100 megawatts of a data center requires as much as 3 million hours of workers. And so this should be looked upon as a great growth opportunity for the United States, furthering growth elsewhere in the world. And most importantly, we need to raise this money as fast as possible and put this to work because I think it's really imperative that the United States is the leader in AI in the world. And I think we need to be the leader in the disbursement of this technology around the world. And I think this is why this is so critical. And I applaud what NVIDIA has done, bringing all these firms together and saying, we have a common goal. We need to raise $500 billion. Obviously, that's an unprecedented amount of money, but we're going to have to raise trillions of dollars over the coming years. And I do believe this is going to be representing a fantastic investment. In fact, I think it's going to be such a large investment. Over time, you're going to see more and more allocation into this asset class. Jim talked about compute as an asset class, but importantly, I look at the financing of data centers. This is the very beginning, like what it was when I started in the mortgage-backed securities market in the 1970s. And I look upon this as a next future for financial engineering.
All right, let me ask.
It doesn't feel the best to compare compute with mortgage-backed securities, given what happened the last time mortgage-backed securities got a lot of attention. But I mean, trillions of dollars into compute. I mean, if we're genuinely believing compute is becoming an asset class, just like oil and crypto and real estate. I mean, if our entire planet is revolving around this new technology and compute becomes the asset class, what does that mean for the valuations of all these companies that are directly involved in providing that compute? And also, what does that mean for the financing questions on how we actually get that compute? Because obviously Jensen's not approaching these companies, which he explicitly said he went to these companies to get this $500 billion unless he needed the money and unless he thinks he can get an ROI on that $500 billion.
It's a good question. Larry, David, you guys might be able to weigh in on this a little bit too. And John, I think you too. But just the idea of how much money you need to raise with this. Is there enough money within the public and private markets? Do you need government money that would do it? I mean, if you think of the national highway system, when you had to build out like this, it had to be government money that was spending some of this. Is there enough money in our capital markets to handle this? And is it profitable for the investors? Like, who wants to take it? John, why don't you jump in?
Sure. I would say, first off, it's great to be here. What Jensen has built is incredible. What I would say is our markets are large, and it's one of the great strengths when we talk about America. When you look at our ability to finance $700 billion a year in automotive or a couple $1 trillion a year in housing, I think we're going to see a similar dynamic. And what is supporting it is supply and demand. So today at our companies, we've seen a 7-fold increase in demand for LLMs in the last 6 months. And yet the amount of compute is not keeping up. The data centers, the power, the chips. And so what you're going to see here is people are going to begin to recognize that this is a financeable asset class. So when you think about your home, you know, when you go to buy a house, the bank underwrites you, but they also look at the value of your home. When an airline goes to buy a plane, they look at the credit of that company, but also the plane. I think historically here, the limitation has been investors have said, oh, I only want so much exposure to this hyperscaler or maybe to this foundational model company. I think when people recognize how powerful and valuable this compute is, no matter who's using it, and in Jensen's case, they've got very fungible, flexible capabilities with their GPUs and the CUDA software. So what I think is markets are going to recognize the opportunity. If the scale gets very, very big, which it is, pricing could widen out. But I think in the fullness of time, the recognition of the supply-demand imbalance and the value of the compute is going to draw capital in.
Can I just add one thing?
Yeah, we'll jump here and here. Okay, let's talk about
I think
Brookfield in particular, what you guys are doing.
Look, just on Brookfield in particular, we've been building out backbone infrastructure since the company started. And originally it started with enormous amounts of power, solar, wind, gas. We moved to data centers, and with Jensen, we've now been moving to compute, both financing, but also building this compute. And we cannot build enough power. We cannot build enough compute for the demand that John's talking about. So this is not about, is there too much financing being made? It's that we can't build it fast enough.
But the question always becomes, will the demand stay at those levels? And Jensen, you see this, you see further out than probably anybody on what's happening here. Is there a point where we can't keep up at the moment, but the demand changes?
Look, I think and Jensen will have a really good opinion on this one, but what we're seeing in our industrial businesses is we are just scratching the surfaces in using AI and the productivity advances that it's giving us. And we don't.
The fact that the semi stocks aren't up after hours, Bloom, Nebius, CoreWeave, NVIDIA, the fact that they're not moving, I mean, NVIDIA's up a little bit, 0.5%. The market's not loving this announcement. I think the market's trying to digest it, but you're not seeing the semis react positively towards some of the most powerful people in the world saying compute's becoming an asset class. And all those companies are, you know, part of the compute asset class, or at least they're trying to become part of it. So those names not really reacting to this. ASTS is moving after hours. We will go through the results in a second. ASTS up 4. Let's finish up with this and we'll get to ASTS.
We don't know how to use it yet, but the productivity advances they're giving us are incredible. And why this backbone it's laying the foundation in the world for the next evolution of business and wealth creation, is because it's so evolutionary or revolutionary that it's going to change everything we do in the world. And that's why it's so important. And that's why with Jensen pulling capital together, I was going to start to go back to what John was talking about, is we're at a point where the situation is that there hasn't been the format for investors to invest into this. And we, David in particular, need to create the structures, and Jensen's leading this to create structures, because there's hundreds of trillions of dollars of money in the world.
The structures look like what? They have low financing. They basically are, you get NVIDIA's stamp of approval, like these are customers that we're working with, that we are giving our limited supplies to.
And the system architectures are going to be specified in such a way that when we know.
Okay, I will let this continue. Let me just read the headline numbers. ASTS, they missed by 165% on EPS. Street wanted negative 29 cents. They came in at negative 77 cents. Revenue, the Street wanted 34 million. They came in at 31 million. So you have a double miss. EPS is down 88% year over year. Yeah, obviously the Street's not the happiest about that. It was up 4 for a second. Now it is down 2. We'll get back into that in a minute as we finish up with Jensen and this NVIDIA announcement.
That they deploy it, we can continuously improve it. We can bring all kinds of fungible and flexible AI models to it. And if anything were to happen, somebody else could take it over and operate it. And so that
Okay, so
that's
is
a very big deal.
And
that's important too, that this will be used by somebody, even if the players mentioned run out of cash at some point.
There will always be a customer for that computing platform. And the reason for that is because, as you know, NVIDIA's architecture is fairly universally adopted. It
and
runs
Becky,
every AI
last
model.
week, we, Jensen and us, announced a deal in Korea. He's putting up $1 billion. We're putting up $9 billion. Naver is going to use the compute, and it's a system. You can now systematize that. What we need to do is take that and do it all across the world and all across companies to be able to systemize to bring more compute capacity to the market.
Well, Jensen, that brings up, and I want to get to Valdemar in just a moment, but that brings up this important question. There have been all these big numbers that have been thrown around. What you're doing with SK. There was a Wall Street Journal story recently that suggested you'd be backstopping financing for $250 billion for an OpenAI plant in Ohio, potentially. That's a lot of money. It's a lot of things to carry on your balance sheet. This is not that, because this is not money that NVIDIA is backstopping in any way, shape, or form. But
And those two things are not that either. In the case of SK, as you know, we're one of the largest users of memories in the world. We're the largest computer company in the world. And so we use a lot of memory, and our partnership with SK is multi-years, and most of that's related to memory consumption and memory partnership. And so that's the SK. With respect to OpenAI, I won't comment about rumors. However, today's partnerships is really about.
He's not denying the 250 billion backstop. If it was false, he would straight up say it's false. He's not denying it, which means there's probably some truth to that.
Expanding it beyond a larger, broader set of ecosystem partners.
But you have $200 billion in free cash flow. You've got a huge balance sheet. Is it your prerogative to say, look, we are not going to pledge our balance sheet against all of these things because you can't? You have other things you're doing it, and that's why you bring in outside financing partners?
No, it's really because there's a phase shift in how we think about computing now. And my partners here have all talked about it really eloquently. This is really the first time that technology chips have become an investable asset class. This is a very big concept. It's a big concept because the computers, these systems are not like our PCs or like our phones. These are revenue-generating assets now. They're productive, they're long-lived, they're fungible, they're flexible. You can use it for all kinds of different things. And so you have the opportunity to support a very large ecosystem of off-takers and NVIDIA developers and AI clouds and AI partners and enterprises all around the world. And it's incredibly revenue generating.
Does that change how you see the investor that brings into this, or how you look at it on a balance
Well, the capital markets have always, I mean, this is in a simple form, and you did it yourself when you opened and you talked about GM financing a car. The capital markets have been asset-backed financing markets for a long, long time. You asked the question about capital availability. What we're doing is we're trying to find different ways to raise or to participate in raising the enormous amount of capital that's necessary to fund this infrastructure build out. And you're starting to see, in a sense, asset-based financing against this infrastructure build out. And that's not surprising because these are real assets. They have real value. You can put a tangible value on it. And there's a lot of capital out there. I mean, one of the things I always step back and think about, there's $9 trillion. When you think about the US capital markets, there's $9 trillion in US money market funds. There's more than $100 trillion in US equities. There's a lot of capital out there. It's our job as stewards of the capital markets, as also asset management firms that steward capital for other investors, to find the best way to deploy this. And will it be a straight line? No. Will there be points, to John's point, where spreads widen out and it feels like things are going too fast? Yes. Will the returns from all of these things be ample? Of course not.
Yeah.
There'll be winners and losers, but that's what the capital markets do. And the capital markets are pretty effective and pretty efficient at getting those things right.
Valdemar, let's talk a little bit about what you've been doing as the global head of digital infrastructure at KKR. You've been doing this for a long time.
Yes.
What's changed, what's different, and what's so important about these?
All right, real quick, then we'll get back to this. ASTS, again, they missed on the top, missed on the bottom. Fiscal year revenue street wanted 170 million. They came in at 200, so a bit better than expected. Bluebirds 14 to 16 expected to ship shortly. Bluebirds 17 to 46 in various stages of production and assembly. Management says, as we get ready to ship Bluebirds 14, 15, and 16 and continue expanding our constellation with production ongoing through Bluebird 46, we are preparing to initiate beta services and select strategic partners. The stock's down 4. I think the street did not want the EPS miss. The revenue miss, this is effectively a pre-revenue company, so I don't think the street's upset about that. The EPS miss by 50 cents after the dilution, something's going on there. They do have a revenue backlog of 1.3 billion, but I think that's what the street is a bit more excited about. We'll talk more about it after this segment with Jensen. In terms of how you guys are feeling, put it in the chat. Does this feel fishy, weird, shady, like amazing because we have all this compute? How are people initially reading 6 of the most important people in business being all together in one room trying to convince us that this makes sense with 500 billion of financing?
Announcements, this memorandums of understanding, yeah, I guess it's MOUs that you would put into that. How does that change the equation for what you've been doing for a long time?
Well, thank you for having me, and this is an incredible panel of experts. And Jensen, thank you for the partnership. We're obviously building on the partnership we've established with Helix Digital Infrastructure, which is really an innovative way of building the entire stack of the value chain from power, from molecule, we call it, to the token, which is, I think, what we're all describing here. Yeah. I think what has changed is the speed. If you think about the build out of internet over 15 years, a couple of gigawatts of power was effectively consumed in a centralized fashion. The cloud is the next evolution, 10, 15 years, maybe 3x that. Today, we're adding that much capacity on a quarterly basis, which is just incredible to think about it, which it takes a whole village to finance this. So we think about it as capital and capability. And that's something we know really well at KKR. We've been doing this for quite some time, big investors in data centers and power. And I think we view this as really a generational investment opportunity. I want to touch on one thing, which is I think what John mentioned, the intrinsic value of the compute layer. So I think we're big believers that integration is occurring and the centralization of compute and needs to move up, and the fungibility of compute. Of course, NVIDIA is an incredible innovator. Just talked about Vera Rubin earlier and rolling that out. And the efficiency of production of tokens per watt of energy consumed is a step change function, which means that compute is declining rapidly and adoption is increasing even more rapidly. That's why price per token is down 99% and probably collapse into cents, which means you have to have a very efficient way to finance it, which is, I think, the parties around here, and then build that infrastructure at scale. And that means time to market and innovate. What's really interesting is that A100s, right? So you would think about it that 6 years into it, maybe 6 or 7 years into it, there is still a market for it. You still actually are revenue generating, to Jensen's point. The utilization of those chips is very high. The price per chip is very high. And so you actually are getting revenue on that. And in that way, you can think about it as a revenue stream, and you can securitize it or effectively divide that risk and sell it to investors who want to participate anywhere in that stack. And
the way I'm reading this is, let's say Nebius needs like $3 billion to buy a bunch of Vera Rubin chips and to start a new data center. Instead of NVIDIA wanting to give Nebius $3 billion, or CoreWeave, Iran, whoever you want to, they would go to Blackstone and be like, hey, can you finance the $3 billion? Nebius doesn't have the leverage to go to a BlackRock or KKR, but NVIDIA does. And NVIDIA's kind of basically telling the private equity partner, we're going to make sure that Nebius succeeds here. And the private equity, private credit guy's like, okay, cool, we'll give them $3 billion. Then it's up to Nebius to use that $3 billion to obviously buy NVIDIA chips, buy a bunch of compute, buy a bunch of memory, and build out a data center. And then that data center needs to lead to productivity and GDP growth. So it's kind of Jensen spreading the risk and not having to use his balance sheet to backstop everything because he knows that's not possible. And so now it's about a lot of other banks coming into play to make this happen and to effectively transform compute into an asset class. At least that's the initial read of like where this 500 billion would be going based on listening to these guys.
That really what gets us excited about this, moving upstream, but also owning the big part of the downstream, and Jensen calls it, it's the land, power, and shell.
Hey, Jim, just a couple of weeks ago, you and Blackstone, or a couple of months ago, I should say, you and Blackstone had your own deal that you put together that was pretty similar to financing like this. I think it was $35 billion for Broadcom. How is this different, and how do you kind of view these things?
I think it's another example that what Jensen was describing a few minutes ago, this whole ecosystem with compute and GPUs being a financial asset you could actually fund and finance. I think those are coming into the mainstream. And I think as we've all around the table have been doing this for 3 and 4 decades, the constant evolution of capitalism, and David's right, there will be excesses, there will be pullbacks. But what I think is different right now in 26 is, in the past, we've thought about these things being financed either through the equity market or maybe the narrow market of private credit. As I said earlier, this is a calling all precincts, any and all. But what we've seen is in the equity market, people don't mind having concentrated bets. By the fact that we're bringing more of an ecosystem and a variety of MOUs, it allows the concentration concerns about one company or one counterparty. What John described is the value between not only in the company, but actually facility. That's also going to bring in more dollars around the globe. So we're at a point in time right now, not only is the global industrial renaissance at a peak, but also we have a situation, we have more global folks who need long-term, long-duration retirement solutions. So whether that's done, institutionally or globally or however it is, that's going to be the key to bringing this all together. So,
David, let me ask you one question on this, though. We did have Steve Eisman of The Big Short fame, who was on Squawk Box just about a week and a half ago. He came in and said, look, the AI trade is the entire market at this point. He said that could be a great thing or it could be a bad thing. But he said wherever you look, there are growth. And it's not just the chip stocks. It's not just the hyperscalers. It is not just the infrastructure companies that are doing all of this. He says it's the banks because they're financing so much of this, too. Is he right? He said, look, it could be a really wonderful thing or it could be a little concerning because of just the concentration at this point. Do you agree with him on that? Or do you see other places in the economy right now that are driving?
Well, let's step back. Across the S&P, earnings growth in the S&P has been excellent across the S&P. One of the things, and my colleague John Waldron was on, I think it was on Squawk earlier this week, and he was talking about momentum and earnings growth. And so you've had really strong earnings growth across the S&P. There are a lot of things that are fueling the market. The economy's in very, very good shape. Is there a lot that's coming out of this enormous opportunity set? Absolutely. I'll go back to what I said. Whenever you have an acceleration like this that brings together in the capital markets lots of capital, the markets don't get it exactly right. There'll be capital allocated to things that don't work perfectly, but the capital markets also sort it out. And they sort it out relatively effectively. I'm excited about this opportunity. I look forward. I'm not smart enough to tell you what's going to happen in the markets next week, next month, 3 months from now. But when I think about 3, 5, 7 years from now, the productivity gains in the economy, the way the U.S. is positioned in the world, the opportunity for real economic growth and acceleration of economic growth as this technology gets deployed in the economy is enormous. And we're going to see that filter through. And it won't be a straight line, but we're going to wake up a decade from now and those benefits are going to be real. And I think it's a very exciting time because of that. And, it's our job to play a role in trying to, for lack of a better term, intermediate that as either asset managers or participants in the capital markets. But there's a lot to be optimistic about when you look forward.
And this is going to impact literally every single trade. And the reason for that is because at first principles, we are going through a platform shift in computing. There's not one industry, there's not one company that's not impacted fundamentally by computing. And of course, we're talking about artificial intelligence, the digitalization of intelligence. There's not one company, one industry, one person that is not affected by intelligence. And so in every single way, when you say every company, every industry is affected by the AI trade, it is not surprising. And on first principles, it makes perfect sense.
Yeah, and there will be winners and losers. I mean, there are going to be big companies, just as there have been in other super technology cycles. There'll be big companies that win. There'll be big companies that turn out to be not what people expected. That's part of the capital markets. One of the things that makes the U.S. so exceptional is that Americans want to invest in the market. They want to take risk. Okay, and that's one of the things that makes our capital markets so special. And so, of course, it's not going to be perfect, and there can be people on either side of the trade. But I'm looking at 3, 5, 7, 10 years, and I'm very optimistic about what this can bring to productivity in the economy and how that ultimately will bring everybody along.
And I would just add, David's right. It's in the end of the day, it's about revenue and cash flow. That's really what matters, and certainly NVIDIA has proven that. But in our 42 years, U.S. economy has gone from 3 trillion to 33 trillion. I believe that growth is going to probably be accelerated the next 2 decades. And if you believe that, there will be winners and losers. So Steve is right in the sense that there will be winners and losers, but this accelerates the global economy like we've not seen.
Hey,
and also just one thing,
sure.
If you think about it, Becky, enterprises are never early adopters, right? Today, AI is mostly consumer-driven applications, right? Just put a prompt, it comes out. In agentic AI, I think the use cases will just be profound. And I think, as Jensen mentioned, this is not a vertical disruptor. It's a horizontal disruptor across everything. And that is really difficult to quantify. And I know that makes things a bit scary as an investor because you're trying to triangulate on risk and the scale of investment. But I mean, we're seeing it in our portfolio companies. And what Bruce mentioned earlier, you're seeing that payout to be really magnified. as we start deploying AI in a systematically and still very early stages of that.
And because it's multi-industry,
Exactly.
the fact that we have a platform that is fungible by all industries, it really de-risks the investment and makes this infrastructure much more investable.
Larry, I want to get your perspective on this too. In terms of, you probably represent.
While we are listening to this, we just got a headline. OpenAI just bought back 7 billion of employee shares itself instead of bringing outside investors. My initial gut reaction to this, is, were there not 7 billion worth of demand for those shares? Why is OpenAI buying back its own stock? They just raised the 122 billion. Why would you use 7 billion of that to not spend on GPUs and data center? Like, why are you buying your employees' stock? Like, someone correct me on why they should do this. Instantly, I think there was not 7 billion worth of demand, but I don't know. I mean, companies tend to do it all the time, but like OpenAI really needs to spend on CapEx. So I don't know. That's a bit weird right here, but there's an update as we're looking at this Jensen announcement.
Individual shareholders who want to get access to this too. It's been frustrating in some ways for them to get access because so many of the big companies have stayed private for so long. What does this mean? What does an opportunity like this mean for people who are looking at the retirement funds and how they get access to this?
Well, we're going to be doing both private financing and public financing for this across the board. We're going to be working with pension funds across the world. So I think the access to these types of bond issuance is going to be much larger. And so I think we're going to see a much broadening of participation. As David said, $9 trillion of money market funds. This is going to be a very attractive opportunity to move away from a short-term money market return to a long-dated return. So I look at this as a real long-term opportunity. I actually see this as also an opportunity for those who are over-invested in equities. They're going to be moving into this asset class too. So this is just going to be expanding the opportunities to invest in a high credit quality investment with long-term returns. The thing that I think we cannot escape, though, we need to make sure that not only this is good for America and good for our investors, we need to make sure that this is good for everybody. We need to make sure that we're broadening participation in AI. One way is investing in these AI securities. But importantly, it is important for all of us to explain why this is good for every community. And this is obviously a big conversation going on. In our own state, the governor put a moratorium on data centers. So we need to make sure we're properly telling the story, and that we're telling the story and showing that this is going to be working. And I'm confident we're going to be able to show that this is working for more and more men and women in the trades. But we need to make sure that we're showing why this is not just a good investment opportunity, but it's a good opportunity for all of Americans.
Becky, I would just add a couple of things. I agree strongly with what Larry has said. There's all this negativity around AI, and yet we're going to have a blue-collar job boom coming from this. We're going to see advances in healthcare that people cannot imagine. I know you spend a lot of time in this area, but what AI can do with visualization and looking at collating different information, pulling it together, it's going to radically change outcomes. It's going to make all sorts of individuals able to become entrepreneurs. It's critical for American national defense. There are all these things that have value. I'd also point out, I don't think it's a coincidence. Most of us here spend our time in private capital, because to build this out, the first few years, there's no income. Once this gets stabilized, once these are yield-based products, then it's easier to sell them in the public markets. But having this robust private market here is super helpful. And then ultimately, a lot of this will migrate. And by the way, we've seen in the evolution companies here that didn't have great credit, You know, you look at a CoreWeave, which Jensen backed early on. We did a bunch of financings. Today, their cost of borrowing has come down dramatically as they've gone public. As Anthropic and OpenAI get public, their cost of funding will come down. It starts with our private capital, which all of us are accessing. Then we go to the public markets, and then this virtual cycle goes. I agree, not everything's going to work out, but this is powerful what it's going to mean for society and certainly markets.
Bruce?
The one thing I would just end with is that the power is what drives all of this.
The access to energy.
Yes, the access to energy. And we need to build more faster. And there is a financing system for power. Like, it's not new what Jensen's doing with compute. Compute will get to where power is. There is, but it physically has to get underwritten. And like, we have 14 nuclear plants that were in various stages of construction today.
Wow.
And it will be another 40 with another 100 coming. We're going to get them done.
And this is the first time in a long time that market-driven forces can build out the sustainable energy necessary around the world.
Becky,
This is incredible.
So you don't
without
need government. You don't need government
funding.
No,
This is all completely
this all
market-driven.
We're building these ourselves, and they're going to get built all across the United States. And remember, we bought Westinghouse out of bankruptcy 7 years ago. Nobody was building a nuclear plant, and there's a renaissance going on today in the United States, led by Westinghouse, that is incredible, largely because it's carbon free, it's base load, and it's the next energy that's coming. Like today, everyone's worried about today, but if they knew there was more coming, that's why it takes 5 years to build a plant. But if you know it's coming, you can consume more of your margin of safety of energy.
So are these concerns about whether we can meet this demand overdone at this point? Do you think, Jensen, that from where you see things, the demand level and how we're building up around it, that it's going to be okay, it'll all work out?
We're going to be constrained for some time, and pretty much across the board, from chips to memories to packaging to systems, photonics, connectors, land, power, construction workers, the whole thing, the entire supply chain up and down, behind me upstream, all the way downstream. And this is happening at a time when AI has become useful because it's starting to do productive work, and it's happening all over the world. And AI tokens are profitable, incredibly profitable. When you have something profitable, everybody wants to make more of it.
Yeah.
Great demand, great profitability. The conditions are exactly right for the work that we're doing right now.
Jensen, why these companies? And did you go to any partners who said no?
No one said no, but this is the world's premier institutional financiers for infrastructure. This is the best of the best.
What John said, that right now you'll be less likely to have public capital that comes into this because a lot of these are companies that aren't making money yet. Is he right on that, or are there going to be big banks and others that kind of step up?
I believe within months you're going to realize that these companies are extremely profitable. These are the fastest growing technology companies in history.
Your customers, you mean?
That's right. These are fastest growing technology companies in history, and the tokens they're generating are incredibly profitable. You know, if the wafers that we buy from TSMC are incredibly profitable, there's incredible demand for it, I'm going to want to buy a lot more.
By the way, who are we talking about? Your customers? Which customers will have access to these?
AI labs. AI
labs are the ones. That's the ones that you think are profitable. But will this financing
AI labs, AI startups. You know, as you know, this last 6 months, the world put in about $500 billion in AI startups. $500 billion, the largest investing period probably in recent history. And these companies need compute. And so we now have the vehicle to do so.
When will we see the first deals?
Well, it's up to these guys. We've got to really hustle.
There's plenty in the hopper.
It sounds like yesterday. Yeah,
I think there's plenty in the hopper.
Yeah.
Plenty in the hopper.
The demand's not the issue. Now we got to hustle and get all of our agreements done.
Okay. Well, folks, I want to thank you very much, all of you, for joining us today. This is very big news. It's the first time we've had the opportunity to sit down with a group of people who are actually the money, the financing behind these deals. And Jensen, to get your insights to what's happening with this too. You said in the next few months, you think that we will see that these companies are profitable, the AI labs?
Well, when they go public, it's going to be the biggest IPOs in history. Yeah.
Okay. Well, we appreciate all of your time today. Thank you. And Larry.
This, the Leopold thing was crazy 2 weeks ago. I think that panel is probably the second craziest thing we saw in 2026. I mean, there is so much to analyze and break down what just happened. By the way, Jensen didn't say neoclouds, but when he says AI labs, he's basically saying neoclouds. He's called them AI labs in the past. So I wouldn't worry that Jensen didn't say neoclouds. I'm pretty sure some of that 500 billion will be going into a lot of these neoclouds that Jensen says will end up being very profitable. So time will tell. ASTS right there, muted reaction. It was up 4. Now it's down 1. Again, they missed on revenue, missed on EPS. The guide was a little bit better than expected, but overall, stock not getting a massive reaction here. Upwork is down 20%, a victim of AI, it looks like. Yeah, they missed on most of their metrics. Net income's down 22% year over year. Revenue's down 2%. Again, I think a lot of AI might actually be commoditizing a company like Upwork. All right, what do people think? What do people think? By the way, real quick, before we get into this Jensen stuff, the OpenAI stuff, the reason that it feels bearish to me, even though it's probably not bearish, but it gives me a weird feeling, is because when companies buy back stock, that's totally fine. I mean, they're supposed to do that. That's a good way of returning capital to shareholders. The problem with OpenAI doing it is they have a $1.5 trillion spending commitment. They only raised $122 billion. So they need literally every penny they can get to pay Microsoft and Google and Amazon and Oracle, and obviously NVIDIA and now Cerebras and Broadcom. I don't think they have the money to just be willy-nilly buying back, employee stock when there's plenty of other buyers, supposedly, that could take off those $7 billion of shares, unless it was negotiated when they raised the $120 billion that 7 out of those 120 billion would be, or 10 out of those 120 billion would be going to employee buybacks, which is fine, I guess. But they really need to spend the money on the stuff that helps them grow. And, buybacks are a way for them to artificially say, hey, our valuation is greater than 852 billion, which obviously when they go public, they're, probably going to pitch a $2 trillion valuation. But I don't know, just a bit weird that they're buying back stock when that 7 billion obviously has to go to so many other spending commitments to help them continue to grow. But nonetheless, that's that OpenAI headline. In terms of this NVIDIA thing, dude, I'm not going to lie, it felt weird. I'm not going to lie, it felt weird. My gut reaction tells me it's more bullish than not, obviously. But, it's one of those things where when you take 6 of the most important people in the world, put them on TV all together for 30 minutes and have them explain to us why compute's an asset class. Yeah, it felt like a sales pitch. I mean, Jensen just bought himself 500 billion of revenue. That's really what just happened. He just secured 500 billion of revenue, because this 500 billion NVIDIA up a little bit after hours is going to go back to NVIDIA. If it's going to be financed through KKR to some random AI neocloud or lab, that company is going to be buying Jensen's stuff. I mean, that is why, for anyone who hasn't figured it out yet, that is why NVIDIA wants to do this. Obviously, they want to keep the AI industry alive, which is really good because, you have to bring everyone up together, and obviously that benefits NVIDIA at the end. But more importantly, these labs, I doubt Jensen's going to be giving money to a neocloud that's going to go and buy Google TPUs. I mean, maybe, but I'm pretty sure whatever deal happens, Jensen is pretty ruthless. He's going to make sure that money comes back to NVIDIA, which gets into the whole circular stuff. Now, obviously, if you can use that AI to create profitable intelligence, which is what Jensen continues to articulate, then it's not as circular because there is a return coming from it. But I think a lot of people are questioning the nature of that return writ large, even though obviously Max 7 earnings were pretty incredible, and it kind of showed that return is happening in a more meaningful way. This is $500 billion. The other thing I'm reading from the actual press release right here, it is an MOU. It's not officially a deal. So these guys haven't confirmed they're going to give the 500 billion. And remember, OpenAI and NVIDIA signed an MOU for 100 billion back in September of 2025 as well. That ended up only being a $30 billion actual deal when Jensen officially invested in OpenAI in the last funding round. So it ended up being 70 billion less than expected. But reading right here from the press release, memorandums of understanding signed with 6 of the world's premier financial institutions to create these partnerships aim to establish the first compute financing platform of their kind at a global scale to enable the AI infrastructure build out across NVIDIA's ecosystem. They're not saying Broadcom's ecosystem. They're not saying Google's ecosystem. They're saying NVIDIA's ecosystem, including leading frontier AI labs, enterprise, and AI clouds. Okay, so on the press release, they do mention clouds, even if Jensen didn't explicitly say it. Under these strategic partnerships, NVIDIA will work with Apollo, BlackRock, Blackstone, Brookfield, Goldman Sachs, and KKR to create dedicated pools of capital at significant scale at attractive rates for, oh, wow, the last 2 words of this press release. Yeah, this is NVIDIA's, baby. This is NVIDIA's world. They will create dedicated pools of capital at significant scale at attractive rates for NVIDIA customers. Those are the most important 2 words of that press release. Jensen just got himself $500 billion of revenue. He said we had visibility to $1 trillion back at GTC over the next 2 years. I mean, if this $500 billion is separate from that trillion, remember when he announced the trillion and the market didn't even care because the market had him at like 970 billion. So really it was like 30 billion more than expected. It wasn't that big of a deal. If this 500 billion is external to that trillion, the stock should be up like 10% right now after. I mean, like if it's 1.5 trillion that he has visibility into. Now, if this 500 billion is how he makes good on his promise at GTC to get to $1 trillion, that's a different question. That's actually a bit more creative for him to get to that number. But if it's a new 500 billion, I mean, the stock should be up higher. It's up 1% after hours. I am more surprised than nothing after hours in the neo cloud space or the memory space is really making a move. Oracle's flat. SanDisk is flat. Jensen pumped the memory names. He talked about SK Hynix and how much memory they're going to be buying. SK flat after hours. ASTS down 2%. Archer down 1%. CoreWeave's flat. NeoCloud's not moving on this is weird. I agree with you. I mean, NeoClouds are some of the biggest NVIDIA customers. And Jensen just secured $500 billion of financing for them, even if it goes back to him. But it does mean that if you judge the NeoClouds on ARR or adjusted EBITDA or all that stuff, I mean, those should theoretically explode, even if profitability doesn't explode yet, because they just got access to $500 billion of capital now. What do people think? That was weird, bro. I did not expect all 6 of those guys to be in the same room, or 7 of them, and basically sell us on this vision. Dude, Michael Burry is gonna have a field day with this. Michael Burry is gonna have a freaking field day with this shit. So is Ed Zitron. It has to be bullish though, right? I mean, like, it feels shady, obviously, but as long as there is an ROI from this compute, as long as compute continues to be profitable intelligence, like, it's circular in the short term, but it's going to obviously lead to a lot more momentum in the long term. For those that want to listen to the Rocketlab call, I am linking Vince's stream right here. We're probably not going to listen to it, but Vince is live with a bunch of Rocketlab OGs. You can click on that. I don't think Matt is on this one, unfortunately. But you can check out that stream for those that want to listen to the Rocketlab call. That was crazy, dude. I did not expect that today. Chef Mike, thanks for the super chat. This NVIDIA thing makes me think that there could be bullish guidance from Corey Van. Well, yeah, like Corey Van Nebius and Iran and all the partners that are going to benefit from this $500 billion, they've had to know this before today. There's no way they kept this under wraps for the past few weeks. So what if they increase their guidance like crazy because they know they're about to have a ton of financing that allows them to buy a ton of chips to then sell those chips and rent them out, which is, what the NeoClouds do. It's just an MOU. It is. Dude, I'm reading this press release again, though. This is all about NVIDIA. Look at this. Look at this sentence. Demand for AI infrastructure continues to accelerate as countries, governments, enterprises, and startups look to drive innovation, economic growth, and societal benefits. NVIDIA compute is an investable asset. one which provides the lowest token cost, highest revenue, and long life, along with a rich ecosystem of off-takers built on NVIDIA's CUDA platform. They're not talking about compute. It's explicitly saying NVIDIA compute is an investable asset built upon NVIDIA's CUDA platform. And these are pools of capital for NVIDIA customers. I mean, this is Jensen basically, in my opinion, saying he was fed up with all these ASICs and all these side deals that Anthropic and OpenAI are doing to build their own custom silicon. And he's coming out the gate saying, no, NVIDIA's the winner. Vera Rubin, Blackwell, Feynman, these are the chips that the world will use. And I will make damn sure that the world uses these chips. And if I have to get the 6 most powerful bankers on the planet to give me $500 billion to make sure that people keep buying my chips, then that's what's going to happen, because I'm mother effing Jensen. I feel like that was the vibe that we got. AMD up a little bit after hours. I don't know what this means for AMD, but I don't think AMD has access to $500 billion of money. I mean, AMD had to give up 20% of their company to OpenAI and Meta just to get them to buy. So obviously it shows the different type of leverage that an NVIDIA has versus an AMD, even though obviously both should benefit if there's this much demand for compute writ large. NVIDIA is not buying AMD. That's not going to happen. Although that would be kind of hilarious if it does. That would be, I don't know if the regulators would allow that, dude. Also, what premium do they pay on that? Could Lisa go to the bankers? I mean, look, if Lisa has a bunch of clients that she can convince the Goldmans and the Apollos of the world to give her money so that she could give it to them so they could buy the MI 450s, I mean, maybe it's just NVIDIA's in a different league here. Rob, thanks for the super chat. Sounding like they're creating a new financial instrument. That's why Larry Fink alluded to MBS. They're trying to securitize data centers to more easily sell to investors and pension funds. So this is 1000% correct. This is actually the piece of the story that I did not mention, so I'm happy you said that. Larry Fink has said for a while that BlackRock, I mean, he said this basically 3 months ago, BlackRock is trying to sell it in a futures and derivatives market. And so this is actually very strategic for BlackRock, because if you've got $500 billion of financing going into just compute, and Larry Fink wants to make fees off BlackRock selling financial products that are the derivatives and futures contracts of that compute, I mean, why wouldn't he say yes to this? It seems like this is exactly what he's wanted for a while.
States is short power, we're short compute, we're short chips, and there are going to be shortages in all three. And memory, 4 things. I actually believe a new asset class will be buying futures of compute. We just don't have enough compute power right now.
Okay, so I think we discussed the bullish perspective on this. Let's get into the bearish side. The bearish side, I think there's multiple layers to it, but first of all, the most obvious bear case is that the AI is not profitable, right? Like, that's the most obvious bear case. Jensen gives $500 billion to like 1,000 neoclouds, AI labs, etc. And either there's not enough demand, there's not enough innovation in AI, you don't have new updates like agents and robotics and all that stuff. Self-driving doesn't become that big of, like, just assume every bear case for why AI is not going to become super transformational. It doesn't really work in the enterprise, all that stuff. Again, these are bear cases that I think have really good responses to them. But the point is, if those bear cases play out, just like, the crypto bear cases played out, there haven't been that many use cases for it. By the way, Larry Fink, his pitch on the Bitcoin ETFs was trying to tokenize everything. And BlackRock has made a lot of fees on those Bitcoin ETFs, right? Which is why he started promoting Bitcoin and all this stuff. So there's always a world in which the compute itself is not profitable, the intelligence is not profitable, and there's not enough innovation there to justify the amount of capex. That's one argument. The second argument is this is just too much leverage. This is just too much leverage at the end of the day. And part of the reason why the mortgage-backed securities in 2008 ended up failing in an epic decline is because you had synthetic instruments that were wrapped in other synthetic instruments. No one was actually underwriting the quality of those mortgages, and they were being repackaged and sold over and over again. and that led to an eventual collapse. Now, I don't think the underwriting in AI is similar to the underwriting in mortgages in 2008, because I mean, when we look at these deals, there is a significant level of sophistication towards the deals that we see. NVIDIA is not supporting every last neocloud that's out there. I mean, the two main ones have been CoreWeave and Nebius, and that's why those stocks have done better than all the other neoclouds. And NVIDIA has been, pretty prudent on making sure that the underwriting of those is strong. Anthropic and OpenAI is a wild card. You could say the underwriting from the private markets of those has been abysmal and has been egregious, because those companies should not be able to sustain $1 trillion market cap. But Jensen, that last sentence he said is, when they go public, they're going to be the biggest IPOs ever. Now, he didn't answer her question. Becky's question was like, are these companies going to be profitable? And he's like, well, when they go public, they're going to be the biggest IPOs ever. That's not really an answer to the question. They could be the biggest IPOs ever for like an hour and then collapse, right? So he didn't necessarily say they're going to be the best companies in the world, but nonetheless, he has to embrace OpenAI and Anthropic because they're the ones buying the most compute. As oil spikes up after hours, so the Iran stuff not necessarily slowing down right here, but the argument here is that there's too much leverage in compute. The underwriting might start to get messy. And if Goldman Sachs wants to, make their money on the gains of lending out all this capital, they might be putting too much trust into Jensen. Jensen, at the end of the day, he's just one person. And if Jensen is wrong, and at this point, I mean, Jensen's making a $500 billion bet. Effectively, Jensen just made a bet with the biggest bankers in the world for $500 billion and said, give me the $500 billion. I'm going to reallocate it to the people that are going to buy my product. Those companies are going to generate an ROI, profits, et cetera, because of all the innovations in AI. That's why he mentioned all the startups that are getting funded. And when all the startups have to use more compute because they're using more intelligence, and all the neoclouds have to rent out more GPUs, they're all going to come back to me, Daddy Jensen, which means you guys will get your $500 billion back. But that $500 billion will create many trillions of economic value. In fact, Larry Fink and the Blackstone CEO also said that we think we're going to be raising many trillions more in the next 3 to 5, 10 years, was the verbiage they used on financing compute. And so that's another bear case, which is that Jensen is taking too big of a bet, and that bet might not pay off. Now, I think it's hard to bet against Jensen because obviously he's been right over the past 5 years. And just looking at the growth rates of S&P 500 earnings, it's particularly due to AI, which means NVIDIA has benefited from ushering in that era. But the question is, will he be right? And I think that's the bigger question. I mean, what are the 6 finance companies? It's KKR, Blackstone, BlackRock, Goldman Sachs, Brookfield, and Apollo. And I think the market got upset about this when it was announced in the morning because, again, these are companies that control pension funds and retirements. That $500 billion is not coming out of thin air. Like, they're going to have to take that $500 billion out of the other assets they custody. Now, BlackRock has $12 trillion in assets, right? So actually, that's a good question. Let's ask AI. How many total assets does Apollo, BlackRock, Blackstone, Brookfield, Goldman, and KKR have together? $500 billion is probably small compared to all the assets they have, but nonetheless, it is a risk because, a lot of those assets are the livelihood of many different Americans. 24.8 trillion. 24.8 trillion between the 6. Jensen's asking for a measly 500 billion of that 24 trillion. This is interesting. This is very, very interesting here for why we're seeing. Amit, why are you fudding? I am not fudding. I am showing the bear case and the bull case. If you cannot listen to the bear case, you should not be investing in markets. It's just that simple. If you can't listen to a bear case on why this might go wrong and only want to hear rainbows and sunshine, you should not be investing in the stock market. I pride myself on trying to show both sides, and I will continue to show both sides. But if talking about a bear case is fun, then, go listen to someone who tells you that everything is amazing. Like, you have to have the bear case in mind. You have to. Especially when you have a deal worth $500 billion that one guy basically convinced 6 bankers to agree to. Again, my default reaction is bullish because that just means more of that compute is going to be funded in the system, which means Micron is going up SK Hynix is going up, CoreWeave's going up, Nebius is going up. The fact that those stocks aren't reacting after hours means the market is not fully on board with this, which is okay. The market needs to take some time to adjust to it and figure out what are the risks associated with it as well. But, you know, there obviously could be ways in which this goes wrong. And I think there have to be, you know, different forms of analysis to understand that. This is kind of crazy, though. This is kind of crazy. The fact that it's NVIDIA specific on this press release is the most wild thing to me. This is not about compute in general. This is about NVIDIA compute. Yeah, look, when Elon says we're going to need, like, you know, massive, massive amounts of compute for terafab, I think that's also part of, like, honestly, Elon eventually is going to need to have some type of deal like this with the banks. Right? They're going to have, I mean, like, how much money is out there for SpaceX to meaningfully generate, to finance building a terawatt of energy? Like, Elon's going to have to go to NVIDIA as well. And Elon, that's why Elon's been, I think, talking so positively about NVIDIA and Micron, because he needs access to compute. This is also going in the line of Jensen's argument around the semiconductor industry 10xing, right? If you're talking about the semiconductor industry 10xing, I mean, it's not to say Micron has to become a $10 trillion company in 10x, but it is to say that there's 10x demand for memory. I mean, like, Micron at $1 trillion is probably cheap. So is Nebius at 50 billion. But it's also quite like, does the market actually believe that? When you have a deal like this, it starts to make you think Jensen's pretty serious about that 10x of the semiconductor industry by getting $500 billion lined up. And hey, if this $500 billion works, who's to say he can't get another $500 billion? Right? Like, if they start deploying this $500 billion in meaningful pockets, Rocketlab taking a hit after hours, wow, down 6%. And it's working and it's creating an ROI, then I'm assuming the banks would like to, I mean, the banks are in the business of lending. They have to find new opportunities to put their money into. And if Jensen's the best capital allocator in the world of AI right now, maybe the banks just give him more and more money. Amid, he said they want pensions and 401ks investing in this directly. Agreed. And this is also where you have to look at a bear case here. I mean, Larry Fink explicitly in those 30 minutes said pensions and 401ks will be getting access to this asset class. He also said the exact same thing in 2024 about Bitcoin. Right? I mean, he wrote an entire letter. Some of you guys were there that day on the market open. He wrote an entire letter about why the young generation is giving up their belief in the American dream and why crypto is the savior for the young generation to have something to believe in. Now, obviously, that was full of shit. But, like, the point is, he was trying to sell the Bitcoin ETF, right? He was trying to say, like, hey, you should invest in this because young people believe in crypto and Fartcoin, and this is, you know, why this asset will 10x over the next 20 years. The jury's out on if he's going to be right about that, but obviously the Bitcoin ETF hasn't done that well. BlackRock has made a lot of fees, but Bitcoin has been relatively flat. This is a bit more believable because you're seeing it in the earnings. But the point is, pensions and 401ks and all that stuff, that they are also invested in IBIT, and that benefits BlackRock. The question is, will it benefit the pension funds that are invested in it? And over the long term, if the Bitcoin thesis plays out, the Ethereum thesis plays out, yeah, it will. If not, then someone's going to have to hold the bag, which is the bear case of this. And I think with AI compute, it's a lot less likely that someone has to hold a bag, given you're seeing the ROI in the earnings. But, you know, that is a question that people are still somewhat scared about. Why is Rocketlab going down 7%? What is Peter Beck saying on the call that's getting the street to be upset? Again, Rocketlab, they put out a bunch of announcements in addition to their earnings. They beat on the top and the bottom, not by a lot. ASTS missed on the top and the bottom, which is why that instantly fell. Beck reaffirmed Q4 Neutron on the earnings call. Okay, so by Q4 end of year, they're saying Neutron will be up and running. They announced a partnership with Kepler. Stock's still down 7%. Fermi is up 29%. This was the data center play last year. They signed a 15-year lease with AI cloud provider TensorWave for 222 megawatts, representing approximately $6.5 billion in connected revenue. That's why Fermi, which was one of the data center IPOs last year, is up 35%. It was down 95% today or over the past year. It is up 35% after hours on this deal. NVIDIA is doing 120 billion of free cash flow. Why do they need external funding? I think this is where Jensen is. I think this is where Jensen's being smart. I mean, if look, if that 120 billion of free cash flow goes to fund all these neo clouds and AI labs, etc., NVIDIA's taken a lot of balance sheet risk. And NVIDIA right now has a pristine balance sheet that just increased their dividend by 25 times, 1 cent to 25 cents, and committed to 50 billion in buybacks. So I think Jensen's probably a little nervous that if he starts making all these investments, which he's already made a ton of investments, that Wall Street will look at that balance sheet and say there's too much risk to touch this and ignore the growth, which already they've been ignoring the growth. Otherwise, NVIDIA would be a $250 stock by now. And that's where he's getting his buddies in to help finance this stuff, which is honestly smart. And as an NVIDIA shareholder, I like that. But, at the end of the day, that's how Jensen is portraying this. Okay, Rocketlab taking an 8% hit. I don't know what they're saying. This could also just be the market reacting in general to Rocketlab having a big move up today. ASTS also down 5% with it. USAR, they missed on the top and the bottom. That's not, whoa, that stock's down 10. Oh, I think here's the headline. Here it is on Rocketlab. Rocketlab cautions of fresh risks to key neutron rocket debut. Interesting. Neutron, a more powerful and larger descendant of its workhorse Electron, is scheduled to be delivered to the launch pad in the fourth quarter as previously planned, but the company stopped short of saying that the vehicle would fly this year. Okay, so they are reaffirming Q4 delivery to the launch pad, but they did not say it would actually fly. Bloomberg is saying it's likely not going to be flying until 2027, which would obviously be challenging Falcon 9. I mean, that's a little bit of a weird reason to dump it. I mean, unless the street really thought by December 31st they would get in the air. I guess it's another delay, even though I don't think the street literally expected it to happen, which it is still happening by Q4, just not, flying. But if it happens early 2027, which they mentioned, last year, that 2027 was the initial timeline, I don't know if that's the best reason to take it down 7%. SpaceX down about 1.3% after hours. They're still behind schedule too much. Also, what is Rocketlab going back to 60? Is that the reason this thing needs to, what's the floor on this now? Is that really the reason it needs to go back to the lows of 2 weeks ago? Or I guess it should be down, but how further down does it need to go? ASTS down 4. not like it's rocket science. Yeah, look, SpaceX, Rocketlab doing physical things is not easy. Orbital data centers, all that stuff. I mean, SpaceX fell 3 weeks ago by 7% after hours because they delayed Starship. So when Elon talks about we're gonna have orbital data centers, it's no big issue. I mean, I'm sure there will be some delays to getting those up in the air. And obviously the market's going to react the way the market reacts. NVIDIA right there still up about 0.56% after hours. On the poll I put in the chat, it seems like the majority of you, at least 50%, are bullish on this NVIDIA announcement. 14% are bearish and 30% are too soon to tell. Look, I think it's too soon to tell until we see what the deals look like. But at its core, the baseline assumption from this announcement, it has to be bullish CapEx. There's no way Jensen's raising $500 billion and then Google, Microsoft, and Amazon are going to slow down on the CapEx anytime soon. Maybe in the next couple of years, but definitely not in the next couple of quarters. And if they do, Jensen's got plenty of CapEx he just effectively raised to be able to distribute. It's just, once again, is the demand for memory really 10x? Because I think I think like if it is, Micron's dirt cheap. The question is, does the market believe when Jensen says the entire semiconductor industry will 10x? If that's the case, what's the multiple you put on NVIDIA? But if it truly is going to 10x, NVIDIA is a $5 trillion company. Like, where does this go if compute is the internet changed everything for the global economy? The AI is already doing that, but to what extent is AI going to do that even further? And if it will, how much bigger will it have to become? Here was Jensen a week ago talking about how the industry will evolve.
The semiconductor industry, that now computers are built not just for people to use, but computers are being built for computers to use. My guess is that the semiconductor industry is probably going to have to be 10 times larger than it is today over the next decade or so. And so working with our partners in Korea and around the world to scale up the supply chain of semiconductors so that we're prepared for this AI future is really important.
I've had the opportunity to ask you about this more than once this year.
I mean, 10 times, bro. Like, what does that really mean? 10 times bigger than... And what if he's right? As hard to believe as it sounds, conceptually, Rocketlab now down 7. What if it's like legit 10 times bigger? 10 times the cloud computing, 10 times the data centers, 10 times the energy, 10 times the land, 10 times the memory, 10 times the CPUs, 10 times the GPUs. 10 times the productivity if we're going to have 10 times the compute for the enterprise software companies. I mean, what if Palantir could really grow 70% for the next couple of years? Not even a couple of years, next 4 or 5 years. Like, is it really, truly the golden age to be an investor and to have access to this technology? Is this bigger than the railroad and airplanes and the internet combined? Like that's what it sounds like. And that's why he's raising $500 billion. But how much does the market believe that? That means 10 times the pop. Oh my gosh, dude. Oh my goodness. According to Elon, we don't even need the $500 billion because money is not going to exist in, forget 10 years, in like 7 years. There's not going to be any need for money. So why does he need to raise all this capital? Michael Burry did short Palantir today. That is correct. He said it's worth under $1. I mean, I don't know what to say to that, but you can think what you want. Not saying Palantir can't go down from here. It's obviously gained 40% in a few weeks. Like, obviously, it could take a breather, but I just don't personally think it's worth under $1. He also bought March 2027 $100 strikes, which means he basically thinks it's going to fall 70% from here in the next 8 months. Look, if Palantir gives us a shot to buy it at 100 again, dude, like, I mean, after all of this, I'm not going to be the most upset. It'll be annoying, but I personally won't be like crazy upset if we actually get a chance to buy this company back at $100, which it didn't even hit 100. It hit 107 as the at the lows. But I don't think it's going under $1, and I do think there's a chance that the company stays in this range versus collapses to $100 again. Having said that, I think he's being a bit more hyperbolic now. Did he explain why? Yeah, he said Palantir's, the exact quote, I'll give it to you. The exact quote, he's mad about their dilution again, dude. Like, he's once again, I'll give you the exact quote, but he said 2 things. He said, considering all aspects of Palantir as a company, including off-balance sheet commitments and liabilities and long-term competitive positioning, I find its shares are worth under $1 in the long term. And then the logic on their earnings, he said Palantir gave GAAP net income of $3 billion over the last year, but they delivered 31.5 million shares to his employees at a value of $5 billion, 6 times the GAAP stock-based compensation expense during the period. And that's his logic, that they gave $5 billion worth of stock, even though they did $3 billion of net income. By the way, they gave that $5 billion worth of stock at various different moments. So right now it looks like it's a lot because it's at 175, but at different moments it didn't look like that. Like, it's just the most minute, weird, nitpicky thing you can try to find to try to be like, oh, this is why. It's like, okay, they issued shares so they could have the best town in the world to produce $3 billion of profit that's growing. 300% year over year, and you're upset. Like it's, and then your conclusion is it's worth less than $1. It's like, all right, there's just not much to say there. NVIDIA up 0.5% after hours. Let's see if we can get some more coverage on this NVIDIA thing. Again, the NeoClouds, the memory name's not really moving after hours. Dude, I wonder what Berkshire is thinking of this deal as well. Berkshire is invested in a ton of banks, and none of the banks they're invested in, I believe, were on stage with Jensen. The big one for them is Bank of America. I wonder why Bank of America wasn't there. I wonder if the Bank of America CEO knows that one of their largest shareholders is Berkshire Hathaway, and there's no way in hell Berkshire would be happy with Bank of America committing to $500 billion of AI financing. Like the actual logic of the people that were on that table is something we need to look into. Because there are other big banks that, like Citigroup, Wells Fargo, why weren't they at the table? You know? And I wonder more broadly how the market is thinking of this here. This is crazy, bro. This and the Leopold thing is pretty freaking crazy. Yeah, where was Jamie Dimon? Where was our boy Jamie Dimon? Now, Jamie Dimon tends to be bearish all the time, but an opportunity to work with Jensen, look, dude, if Jensen wanted, I think Jensen would want Jamie Dimon over KKR and Apollo. And I think that's why the market, is it raining? It's been raining so much over the past week. I think the market, the reason they tanked NVIDIA when that news came out is because KKR and Apollo, how are their stocks doing this year? You know, they were the poster childs of this private credit nonsense. Yeah, KKR is still down 20% year to date. Whereas JP Morgan's at all-time highs. And Apollo year to date is still down 10%. And I would imagine Apollo and KKR were pretty excited to pick up the phone when Jensen called them. This is interesting, man. This is I think this is one of the biggest things we've heard this year. Rocketlab still down 7 based on Neutron. It seems like being delayed once again to early 2027. Could you imagine if he had got Greg Abel at the table in Berkshire Hathaway? I mean, Berkshire did invest, what, $30 billion in Google over the past couple of months, $10 billion recently. Like, you're telling me Berkshire is not even kind of interested in financing this stuff? Speaking of Berkshire, let's get an update on them putting their cash to work right here.
And I think this is a market that obviously has rewarded those two sectors over the last 12 months, but I think will continue to based upon the trends we have.
Company also bought back $4.5 billion in stock. That's been a big element there of some investors want them to do a lot more of that. It's not as if the stock's super cheap, but I guess cheap enough that people are happy to.
No, the cash hoard you probably have it in front of you, Michael. I think got up to $380 billion.
Like 360,
yeah. 360, which against $1 trillion company is obviously significant. And the word you all used earlier in the show was patience, which is something I think that Berkshire Hathaway this
decent
sort of
song
change.
by Guns N' Roses, by the way.
Not really.
I mean, it was, they had to put that one out. They needed to get one out.
What was off of Use Your Illusion?
No, it was in between Appetite for Destruction and Use Your Illusion.
I'm sorry, Michael.
No, this is much more important.
Well, it is actually. But what I was going to say was, so now they're putting money to work. Are they doing it at the right time?
Yeah.
Or are they doing it historically with that Buffett indicator at levels we haven't seen maybe ever? They're doing it at the wrong time. The market is rewarding them today.
I would say even Warren Buffett has said, listen, that Buffett indicator thing was an observation in time. It's not as if he feels like it's determinative of whether stocks are in a bubble or not. But Courtney, if you look at Berkshire Hathaway, it's got a lot of housing related. It's got the energy. Insurance is on a little bit of a downswing just because of underwriting profits in the industry. You see things like Progressive and Allstate not doing that well. But it is this collection of, look, if the economy's good, Berkshire should capture a lot of that.
Absolutely. And I think there's been a lot of talk about that. Of you still want to own the AI trade, but there's this broadening that's happening. I think Berkshire is a really good way of doing that. And if you look at the stock, it actually has been underperforming the S&P 500. Today, it outperformed the S&P. And I think what investors are liking to see is them buying on that underperformance. And they're finally starting to deploy some of that cash. So I think investors are going to continue to reward them.
Yeah, they never did.
I mean, they're buying up Google. That is now a top 5 holding for Berkshire Hathaway. So they obviously are deploying. Is this news bullish for Intel? Yeah, the $15 billion that Intel went out to raise today, guys, it was like 20 times oversubscribed. I mean, now granted, a lot of these debt offerings have been massively oversubscribed by the semiconductor companies, the hyperscalers, but it's not like Intel is having a hard time finding 15 billion, because I think a lot of investors are like, look, we need a TSMC inside the United States. Intel is our best chance to have that. And although their foundry business is still negative, they're going to need the capital, Trump supporting them, Jensen supporting them. Both of those entities have not sold their position, even though they're up many billions on it. And who knows, maybe, obviously the earnings multiple is kind of egregious for Intel, but the broader qualitative story around building chips in America, there's plenty of demand to finance that. And there's plenty of demand to give Jensen $500 billion, right? So all of it's kind of interconnected. Rocketlab right there down almost 9% now as that's getting hit. Paradox, thank you for the super chat. Appreciate you, man. Thank you for being here. Thank you for guys keeping up with the content. I did not know Jensen was going to be on CNBC Live here after hours. But obviously Rocketlab, ASTS, and HIMS were kind of the main earnings today. By the way, Mamdani is taking a little bit of a hit at Amazon.
Special delivery. If it looks like an Amazon delivery,
and it drives like an Amazon delivery,
then it's an Amazon delivery. Amazon is spending millions of dollars to convince you that this isn't an Amazon delivery. But all you have to do is see for yourself.
My uniform says Amazon.
If I don't wear this Amazon branded vest, disciplinary action will be taken against us. The workers' routes and hours are set by Amazon.
so why isn't Amazon responsible for these vans?
Because Amazon and other corporations have built a vast network of subcontractors
that shield them from responsibility. Amazon tells these subcontractors where to drive,
who to hire, and what hours to work.
I do all the work that makes Amazon all the money.
This is why I'm proud to support the Delivery Protection Act, sponsored by Councilmember Tiffany Kalan. Because if Amazon is delivering your packages, they should follow the same rules of every other delivery.
When injuries and worker accidents skyrocket,
Amazon says they have nothing to do with it.
they can't have it both ways.
By shielding themselves behind these so-called independent operators, this trillion-dollar company is able to avoid regulations on our city streets. And that's why we want to pass the Delivery Protection Act.
Say what you want about Mamdani. He knows how to market. And to be honest, he's probably going to get a lot of New Yorkers to vote for this. Now, what does that mean for Amazon's business in New York? I don't know. Probably not the best if this actually passes. Amazon was supposed to build a headquarters in New York until AOC kind of pushed them out. I think this was 2021 or 2022. But they were looking for New York to be, it was going to bring like 25,000 jobs. And, you know, the political party of New York completely rejected it. Nonetheless, this subcontracting thing about Amazon is actually really interesting. If anyone's actually really studied the logistics parts of Amazon's business, which I'm not an expert in, but about 3 years ago, I started looking at a bit deeper for a variety of reasons. One of the documentaries that I want to link right here actually gave a very good insight on how Amazon essentially controls their workers, but also stops them from unionizing. I mean, Amazon has done so much to stop unionizing in every part of the country that they work at. They haven't been able to be effective everywhere, but they've taken pretty dramatic steps. Rocketlab down 9%. These subcontractors are basically a way for Amazon to shift the responsibility from them to the subcontractors that ultimately hire the Amazon employees. Now, from an Amazon perspective, that's very smart. Obviously, from a worker perspective, there's going to be concerns, which is what Mamdani is tapping into right here. But I don't think subcontractors is necessarily a weird thing for Amazon to do. I mean, every company has subcontractors that are not directly tied to the parent company, because obviously that gets into the conversation of a union then, right? Like if the parent company is attached to every single touch point of the employee workforce, you start getting into conversations of a union. But Amazon has worked very, very hard to make sure that shit doesn't go back to them. And, you know, that's part of the reason they've become as big of a company as they've become. The overall political pushback you're seeing right there in that video, I think it's very similar to the political pushback that we're having on data centers. And Larry Fink talked about it in that CNBC piece, that people are not happy with data centers. The fact that New York State banned data centers for a year, the fact that Nebius is struggling to officially get approval. I mean, they have approval, but they're obviously getting some pushback here in the Vineland location in New Jersey. It's something that you don't want to see spread massively. And I honestly, this is where Jensen, I think, hasn't done the most campaigning. He's convinced a lot of investors about why AI matters. He has not really, I think, convinced the everyday person for why data centers should be built across the country. It's not necessarily his job, but you know, it's one of those things where that political pushback is not the best thing in the world. Tesla also does not like unions. That is correct. Tesla and Amazon have fought vigorously to make sure their employees do not unionize. Interesting, man. This is a very interesting announcement here by NVIDIA. That is also true. Look, if you've ever tried selling something on Amazon, as Danny says, like they have a 5.2% operating margin on e-commerce. All their money is AWS. So really, you know, everyone complains about the Amazon fees, but I mean, at the end of the day, the Amazon, like the bottom line does not make a lot of money off selling water bottles from China. But the entrepreneur who built a water bottle brand that's using Amazon for their fulfillment and logistics in the United States, like they're the ones that make the majority of money, and they get to use Amazon's massive network of distribution. They have to pay fees for that, but it's not like those fees are that profitable for Amazon because they don't really make that much of a profit on selling a lot of stuff. So there's obviously different perspectives on how Amazon operates as a business. And obviously they've done some bad things. So is Meta, so is Microsoft. I mean, all these tech companies don't get to be multi-trillion-dollar companies unless they're ruthless in certain areas. But the question is the cost-benefit analysis of the good and the bad, and then, you know, how many jobs they're ultimately creating. Amazon has one of the highest minimum wages in the country. And they did that years ago, along with guaranteeing college education. Like Amazon has done a lot of stuff on their own to be friendly towards workers, even if there are, you know, different perspectives from other people on workers at Amazon. CoreWeave after hours, not really making that big of a move. Nebius is still not making that big of a move, basically flat. NVIDIA is up a little, but not reacting either that much to this. Let's see if we can get a bit more coverage. Let's hear from Gene Munster what he thinks about this $500 billion announcement.
Thought we were going to have to spend from here?
I mean, the big picture is that it is an accelerant. It is an indication of how early we are. And there's a dynamic that is a little bit concerning in terms of the significance of this development, which I think just reinforces that we are in the second or third inning of the infrastructure build out. That just overwhelming endorsement that this 500 billion suggests to that piece. And then the market reaction to a lot of these, NVIDIA trading off a couple percent. We own a lot of these smaller AI infrastructure companies, Coherent down 15% today. I mean, what you have seen is basically the market saying either I don't believe it, or if it does happen, it just keeps building this law of large numbers. So, I mean, those are the two kind of orbits that kind of jump to top of mind. But if you just look at the substance of this and taking the conversation that you just had and kind of putting my perspective on it, is that we're just still so early. This is not about NVIDIA trying to juice their sales in the future. This is about NVIDIA hearing from their customers that they just simply want more and don't have access to capital to buy those chips. And I think it all plays into this simple theme is even though we obsess, we being tech investors, about where AI is at, I don't think we fully appreciate how early we are and the significance of how long that this kind of spending can go on.
It's interesting because there have been times when you say we're early, or when, you know, Sundar Pichai says we're early from Alphabet, and the market says, great, we have a lot of runway. But there are other times when the market says, oh no, that means the bill's going to keep growing, and then the spenders are going to have to spend more heavily. And I really am interested in the destination here, wherever it is, however far it is in the future, Gene. And by that, I mean, when Jensen talks about, hey, this is the new electricity, why am I excited about that? Electricity is a commodity thing. It's a baseload thing. It's kind of a regulated market. Your electricity is the same as anybody else's. Why is it exciting long term to be the landlord, the provider of that?
Well, I think the electricity analogy is similar to the kind of, it's the petroleum of the future. It's the oil of the future. And I have long kind of disagreed with that view. I think what we see when it comes to intelligence is, yes, some of it is like electricity. Some of it, this intelligence is commoditized, but there is a top end of this, a 10% end of the knowledge, these AI models that I think are extremely valuable. And some of those pricing, even though they've come down, we see the Jevons effect kick in and the usage goes up exponentially. And so my response to that is, I don't think it's like electricity. Not all AI inference is created equal, number one. And number two, this whole concept, as price does go down and there'll still be higher tiers, I think you're just going to see an explosion in the use of these tools. Keep in mind is that when we, again, the tech investing community looks at the use cases around AI, they're still relatively limited. A lot of testing, but it's very hard to point to some very definitive beyond Google search or cloud growth or maybe Meta's advertising business. And why that's so important is that ultimately is that if we are that early, I think it speaks to, or if those are the only the cases, I think it speaks to how early we are and that what I think is going to be a spread in terms of the value of these tokens.
Gene, when Becky and her team convenes a group like that, which is historic in a word, that's
Amazing.
making a statement. Tim called it an arms race. That's right. There are people in China that watch that. So what are your thoughts in terms of what it means for this sort of global back and forth?
I mean, don't overthink it. Like, I understand that there is the private markets, the private debt markets do have a negative stigma associated with it. But the big picture is this: these are very sophisticated investors, and we work with these type of investors. And I promise you, they're not doing this to try to play along in a hype theme and something that they think is short-lived. They're doing it for something bigger. Some of the stuff that Becky talked about around kind of nationalism, what's going on between the US and China, the use of AI, I think all of this.
You guys believe that? Is that the core motivating reason for why these companies are getting involved here? Or is it ultimately to make sure their bottom line continues to grow?
Still stand by. We're going to be early. I'll put a prediction out there. Over the last 3 weeks, the expectations for hyperscaler CapEx growth has gone from 24% for calendar 27 to 36%. I bet it's going to be above 50. And for calendar 28, it's at 15% now. It's probably above 25. We're just still early for all the reasons you talked about, Kai.
All right. Well, we'll see, Gene, if in fact the market likes that message that we are still early. I don't know what I'm going to do if I'm not overthinking it, but I appreciate that.
Yeah, the market's obviously overthinking it after hours, right? If the market wasn't overthinking it, I feel like every semiconductor stock would be up a lot. I mean, if Jensen's getting $500 billion of effectively free money, it's not really free, but it's not like he had to generate it through his cash flows. He shook hands with 6 bankers and got the money. All of that money is going back into one thing: compute, which, yes, benefits NVIDIA for sure, but it also benefits the entire stack. So if the market really, wasn't overthinking it, I mean, these stocks should be up a lot on this news, and I think it's healthy for the market to think about it, and try to analyze what's actually happening. But as Gene said, the market's not appreciating how much freaking money still has to be spent on compute, and as long as the belief of that continues to be greater than the amount of supply there is, then obviously that creates the compute constraints, which is why all these stocks have done as well as they've done. The China thing is interesting. I mean, look, China's investing pretty rapidly in AI. They're distilling our models as well. Jensen's pretty passionate about China. I don't know if those 6 bankers did this deal with him just because of American nationalism and staying ahead of China. Obviously, I think they're motivated by the money they can make off of it, but I think more intrinsically they believe in compute as a new asset class that creates derivative products for the banks, the private equity firms, private credit to make a lot of money on. And that's the bigger reason why I think they're excited about this. And this MOU kind of establishes that in a more meaningful way. $500 billion committed to this. We're his biggest customer. That's also true. This is basically like a department store issuing a credit card. It will boil down to how responsible the companies are they use the credit. Yeah, and effectively, it's also going to be up to Jensen's allocation of capital to make sure that the companies he gives it to don't misuse the money. Vernon, thanks for the super chat. Doesn't this provide SpaceX a new line of funding? They're exclusive using NVIDIA. Yeah, I mean, there's a world in which Jensen basically lends out the chips to Elon and gets an IOU on the financing. Or in the craziest scenario, Jensen invests in SpaceX, and then that money obviously comes back to Jensen. And says, hey, we want to support Elon's build out. I mean, it's not that crazy, bro. Look, SpaceX at $1.5 trillion. Is it expensive? Sure. But if Jensen thinks the semiconductor industry is going to be 10 times bigger than it is today, and SpaceX is now turned into the biggest compute player, which has helped justify the valuation because it's not just Starlink anymore. For Elon to build the terafab, he's going to need money, and he's going to need a lot of compute. And I don't know if NVIDIA taking an equity stake right here and looking 10 years out would be a bad decision. Quite frankly, there's something that Steve said a year ago, and I still agree with him. What if NVIDIA, he called it the Berkshire of technology. What if NVIDIA took a stake in every Mag 7? What if NVIDIA bought 10 billion of Amazon, 10 billion of Google, 10 billion of... I mean, all those companies are buying... Now, granted, they're now competing with them, including Microsoft today. They pumped because they're coming up with their new chip soon. So I guess the time for that might be done because now he would just be subsidizing their competition. But like, if he could guarantee that money's going to come back to them and these companies are going to be bigger in the future, they are the behemoths of AI. Like, why doesn't NVIDIA have bigger equity stakes in these companies? So he's raising $500 billion from banks to put into semis and AI-related companies, which will then use that $500 billion to buy NVIDIA GPUs, and then he will be paying back the banks. Exactly. So Goldman and NVIDIA will do a deal with IREN, just making it up. IREN needs $5 billion. Goldman is going to get the $5 billion in conjunction with NVIDIA, although NVIDIA is not going to be giving a penny of that $5 billion. It's going to be Goldman's money. That money is going to go to IREN. NVIDIA is going to be kind of the intermediary, making sure that IREN doesn't mess up with the $5 billion. They're going to give Goldman the guarantee. Goldman probably wouldn't give IREN the $5 billion for the hell of it, but they trust Jensen's word. So if Jensen says okay, they're going to give it to them. Goldman's going to obviously make their interest on the $5 billion. IREN's going to have to use that $5 billion to then buy NVIDIA GPUs. Jensen's going to book in that $5 billion of sales. Jensen's going to give the GPUs, and then IREN has to take that $5 billion and turn it into $10 billion by renting out those GPUs or doing whatever other services they would provide on top of that. And then that money ultimately goes back to Goldman Sachs with interest, and theoretically it should be good for IREN investors because IREN should be able to grow their ARR if they have access to those GPUs. I mean, that's how I see these pools of capital being allocated. It's not going to happen for Broadcom, not going to happen for AMD. It's specifically going to happen for NVIDIA chips. And then those companies just have to make sure they get an ROI on it. All the IREN guys are happy I said IREN right there. Dude, where is the deal? We need a big deal. IREN. Give us something. They gave us $2.8 billion a few weeks ago with like these undisclosed AI labs. Give us Amazon. Give us Microsoft. Give us something. They're basically going to be loan sharks. I mean, yeah, they're just going to have Jensen's approval to be a shark. Where's Archer after hours? Archer. Wow, so all these stocks went red. Archer went red. Rocketlab got smacked down 7. ASTS smacked down 3, which is actually not a horrible reaction. And then what's the other one? HIMS got hit down 5. That's what you got. That is what you got, folks. They did get the Warriors deal. I thought people were too bearish on the Warriors deal. It's $50 million. Like, it's a lot of money, but in the grand scheme of things, IREN, $50 million should be a rounding error for IREN. So I thought it was actually a good deal. All the people that go to those Warrior games are Silicon Valley people that are in AI. So them being synonymous with IREN, I think is actually pretty freaking cool. But they just got to follow it up with, an actual deal after it. By the way, HIMS, the reason they got hit is because of the legal costs. So that's why they missed EPS by as much as they missed. Call Tanner. Let's see if Tanner even picks up right now. I'm so curious to see what Steve's gonna have to say about this, dude. Steve, I can already predict Steve's gonna be like, this is the most bullish shit. Steve's gonna love this announcement. Steve's gonna be like, they just got a free 500 billion? You can't be bearish on that. Which again, I agree with that gut reaction. It's just the market's obviously not agreeing with it yet, which is why these stocks are not moving. Okay, let's see if he picks up.
Yeah.
Yo.
What's up?
Are you busy?
Not really. What's up?
Okay, I'm live on the market open. Just want 5 minutes of your time. Or sorry, market close.
Close.
Market close, yeah. Did you see this NVIDIA news?
500 billion?
Yes.
Yeah.
Okay, what's your take?
I mean, Jensen moves markets. I don't know why. Like you tell me. Why is NVIDIA selling off? We've known about this rumor for a while. Now we find out that a bunch of a Wall Street consortium is going to help out with the financing, and they sell off even more. Doesn't that reduce risk but still get the job done?
Yeah, I think Micron, Nebius, CoreWeave, and all of them should be up after hours. I mean, $500 billion being put right into compute seems bullish to me for the industry. I kind of think the market's just not fully buying it yet.
NVIDIA's guaranteeing purchases for their own chips, and someone else is going to pay for it. I don't understand why that's negative.
Well, I think the market feels like it's a bubble when you say it like that.
Yeah, but if if OpenAI is going to need that compute, they obviously expect a lot of demand for their product. Now, that's up for debate whether that's going to be the case. But looking at their overall ARR, Anthropic, OpenAI, all of these companies, they're now, some have rumored to be higher than $100 billion just between both of those companies.
Yeah.
Elon Musk recently just said that, the data centers of the future will be able to generate between $30 and $50 annually per watt. Per watt on a gigawatt, that's about you've got to times that by 1 billion. So you're paying for these data centers that are for 10 gigawatts going to be $500 billion. And they're saying they can generate between 300 to 500 billion per year. So what, they have a 1-year payback period? It's only a matter of if that demand keeps up. I don't know. But I don't see any negative signs from GPU rental prices that we just got an update on. OpenAI or Anthropic, their ARR that's currently coming in. And I know that we don't have hard numbers on that, but the rumored numbers that have been being passed around by very reputable names. Brad Gerstner just recently tweeted that Anthropic's ARR was at 80 billion. So I don't see any reason to believe that it's going to slow down if the hard data is coming out saying that customers want more of this.
So from a technical perspective on NVIDIA itself, 500 billion of money that's not theirs being used to finance customers that explicitly, as per the press release, will have to buy NVIDIA chips. That should be regardless of all the other different factors around it, which I think you did a good job explaining why the general AI compute theme makes sense. That should be insanely bullish for NVIDIA just as a company. No company has that type of leverage to get $500 billion of money to buy their product.
From one customer.
Right.
That's not their full scheme of revenue that they want to produce. I mean, the numbers that are coming out are now looking ridiculous. I think the information posted that NVIDIA said that they can make 1,000 Vera Rubin racks per day. It's something it comes out to something like $600 billion a quarter of how much they believe that they could produce. Now, that doesn't mean that they're going to make that much, but they believe that they have the supply chains in order to do that. Now, if, like we talked about, putting up all that spend, does NVIDIA's growth need to slow down in the medium term if this build out still continues? We're about to see CoreWeave, we're about to see Nebius. All of these companies are going to show off CapEx for the rest of the cycle. Almost across the board, we saw CapEx increases. Not for Meta and stuff like this. They increased their lower bound range, but like a huge amount of that spend is going towards NVIDIA. They're about to grow 100% year over year at the like they're about to put up the highest amount of free cash flow that we've ever seen from a public company. That's what we're expecting for Q2. I think that should probably be given a premium. I think that people are just worried about buying into a company that's like 9% or 8.5% of the S&P 500. It's like pretty concentrated at this point.
Right. All right. Well,
I don't know. How are you feeling?
I mean, look, I think it's good, bro, but it was just weird. Like 6 bankers and Jensen on a table for 30 minutes trying to convince everybody compute's becoming an asset class. Like everything you said is 100% right, but I think everyone was just like, whoa. Like they were really selling it hard. And I mean, that's their job. That's what they have to. But the fact that the market's not reacting to it, maybe it's a fluke, or maybe the market's trying to once again grasp like, where is this money going to? How is it going to be dispersed? What are the loan terms going to be? How are the companies going to generate an ROI so that NVIDIA, Blackstone, and the company get paid? Like there's a lot of nuances here. But to your point, $500 billion of free money is $500 billion of free money going into the ecosystem, which is, I would imagine, bullish for neoclouds, memory, GPUs, CPUs, et cetera.
Yeah, I think one of the things that I love about Jensen is there's a lot of great entrepreneurs and they have great ideas, but selling that idea to the public or to other investors is extremely hard.
Yeah.
You know, it takes a certain type of CEO to sell their ideas to others. And I think looking at that table that Jensen has essentially corroborated and put all those people there, it's essentially like, hey, not only am I excited about this, but the whole world's capital is also excited about this, and this is what's going to finance me. You know, this is going back to NVIDIA. And the fact that he just has that power to demonstrate or lay out the future that he sees, I think is very exciting. Like, I like backing that type of individual.
Yeah, and look, he's freaking Jensen. Like, if anyone's going to have that type of leverage, it's going to be the CEO of the world's largest company. So
don't forget it.
Tanner, thank you for your time. By the way, congrats on the Vlad interview. I'm linking that right here. If no one saw it, I thought it was an absolutely great interview. So congrats on that.
The in-person interviews are the best. Now I just need to get people down to Toronto.
Well, when I'm in Toronto, hopefully in the future, I'd love to sit down with you.
Yeah, brother. That would be awesome. All right. Talk soon.
Thank you, man. Appreciate it. Later.
Bye.
Jensen did just tweet, and he basically put out an article saying NVIDIA's AI factory compute is becoming an investable asset class. All right, there is a lot to absorb here, folks. That is it for me. Tomorrow we will have a lot to analyze, a lot to talk about, try to get some details on what exactly is happening. I'm sure there's a lot of people that are going to be saying, what the heck is this? And you're going to have a lot of people like Tanner that are saying this is actually the best thing NVIDIA could have done to continue fueling their growth, especially when they have all these partners involved. Again, market's not really reacting after hours, but over time, we're going to see how the market thinks about it. CoreWeave flat, ASTS down 2. Rocketlab was down 8. Now it's only down 5. So the space name taking a little bit of a hit, but not as bad as it was before. All right, folks. Thank you all for being here. We'll be back tomorrow. Try to get some more perspectives on what's going on, and we will have a lot to analyze. Ironically, tomorrow is CoreWeave earnings, so you talk about one of NVIDIA's biggest customers. We'll have a lot to dive into on their numbers, and then we'll see how the market ultimately reacts to this new $500 billion announcement. Thank you, everybody. Appreciate you all. I'll see you guys tomorrow on the Market Open. All right, everybody. Have a good one.